Hello everyone and welcome to the most important video on this channel. My name is Omar Wick, and if you're wondering why my name is Omar Wick, it's because I trade Wick candles. So, in this video is gonna be so long and so important, so it's very important that you watch it until the end, alright? So in this video, I'm gonna be explaining my 90% win rate Wick strategy in depth. I made a video about it before and it blew up. It got like 30,000 views. Thank you all for watching the video. But I simplified stuff maybe too much, right? I didn't explain all the rules in depth because I didn't want the video to be too long. It was like 17-18 minutes video. But this video, I'm gonna explain over everything I know about the strategy, everything, like literally everything. So as if I took my brain and I want to make a video about it. This is the video. So if you're watching this video, you're very lucky because people will charge you thousands of dollars for this. But I'm doing it for free. So I'm gonna be explaining everything I know. And yeah. Before we start, I want to make sure you couple of, like, how do you say it? How this course is gonna be, this video, how it's gonna look like. So first thing, we're gonna make a couple of rules, so we get to know each other. First thing, if you're laying down in bed right now, watching this video from your phone, hoping to become a millionaire after you watch it, that's not gonna happen. First thing I want you to do is actually take this video seriously. This video is gonna take me a couple of hours to record. I don't know how long, maybe 1 hour, maybe 2 hours. I don't know. I really don't care. I'm not gonna stop recording until I give you all the information I know. So, as an appreciation for my time, all I'm requesting is sit down properly, bring a pen, bring a paper, I don't know, Word document, notes, whatever you want, and write down everything that I'm saying. Otherwise, you're not gonna actually understand what I'm talking about. And let's say I might explain something now, you understand it, and then when I explain the full strategy, like, you gotta be like, oh, what does he mean with this one? And then you have to go back all the way to the beginning of the video and rewatch that part. So for you to skip that part, I would say write down notes, take notes. Otherwise, you're gonna forget stuff. It's a lot of stuff that you're gonna learn today. So write down stuff, take notes, and actually understand. That's the first thing. Second thing, I made this video in a structured way that everyone will understand it, starting from beginners until advanced. So if you're an advanced trader, I know I'm gonna be talking about in the beginning about boring stuff that you might not see as interesting or important, but it's very, very important that you actually lock in on these ones. Why? Let's say the trends. A lot of people know how to read trend, but the way you see trend is different from the way ICT see trends, is different from the way I see trends, right? So I want you to be able to actually make money using this strategy. I want you to know everything I know. Use everything that I use. You get what I mean? So that's something also very important that you do. What else? Yeah, the way we're gonna do, so if you're a beginner, don't worry. I'm gonna explain everything, starting from, I don't know, what a Wick candle is, until the Wick strategy. Some of you also have been texting me on IG like, yo Omar, I haven't been getting 90%, I've been only getting 70% win rate. Some of you have been like 75, 80. Why is that? I'm gonna explain that also in details, like, okay, how do you get the 90 and how do you get the 70? And I do take these trades, the 70% trades, I do take them. I'm gonna explain to you like the difference between them. How do I achieve the 90 and how do I achieve the 70? And how do I rank each setup I take? A setup, B setup, C setup, what's the win rate of each one of them? And so on. So that's something also I'm gonna be talking about. Actually, you know what? I have a list of stuff I'm gonna be talking about. So I'm gonna be talking about understanding the candles and the difference between Wick candles and the normal candles you should use in order to see the Wick candles. What is the external trend? How trend shifts and reverse, internal trend, imbalances, best pairs to trade on Wick strategy, and like Forex, on crypto, blah blah blah. Best trading sessions. What do I do when there's a news? The strategy itself, the core rules. There's a special entry that I use, which is called the Omar entry, or I call it sometimes early entry, which I never talked about. How I rank the setups from A setup, B setup, C setup. How to put an alert for the Wick candles so we don't spend all the time watching the charts. We can have an alert that sends us a notification. Okay, Wick candle showed up. Because I don't sit on the charts and just watch all the time. No, I just get an alert and then I enter trades. And yeah, so on. So just so we're on the same page, I want you to actually understand everything. Like, look, don't skip to the strategy. You could do that, but it's your loss. I'm not losing anything. I'm posting this video either way. But if you skip directly to the strategy, it's gonna be your loss, to be honest. I want you to actually understand everything, all right? People usually will charge you thousands of dollars for this, I swear. But I'm doing it for free because I want everyone to become profitable. A couple of years ago, I used to live in a basement in Sweden. And now I'm traveling all around Asia, living in penthouses, traveling from country to country, city to city, and it's all right. And my source of income is trading. So I understand what it means to come from, yo, I'm a normal guy, to I want to become a successful guy or girl. We're not. It doesn't matter. All right? So to know how I'm going to be explaining today, I'm going to be charting out, let's say on the side, like on here. I'm going to be drawing so I can explain like better. And after that, after I explain every single thing that I explain on the side, I'm going to be explaining it with an example on the charts. So we're going to explain on the side and then on the charts. On the side, on the charts. So this way you can see how it looks like in real life example and how it looks like on theoretical examples. Okay? Sounds good? Anyway, I'm going to skip yapping. Let's get into it. Get ready. I want you to be fired up and let's see. I'm excited for this. I know it's going to be tiring, but I hope it's going to be worth it. If I can change 5 people's life after watching this video and they become profitable traders, I'm satisfied. I'm satisfied. If 5 people after watching this become profitable, I swear I'm happy. I don't need. Of course, I wish millions of people to become profitable. I'm saying if 5 people become profitable, I'm okay. So let's start with the basic candles. All right, very easy, very simple, very basic, and yeah, let's get into it. So this is called a bullish candle. And this is called a bearish candle. All right? Bullish, bearish. You don't care. I could explain to you why it's called bullish and why it's called bearish, but it's not important, to be honest. So, a bullish candle consists of a body. This is the body. And it consists of a wick and a wick. A bullish candle opens from the bottom and closes from the top. Okay? That's all you need to know for now. So a bullish candle closes on the top, opens on the bottom. This is the body, and these are the wicks. Okay? On the other hand, the bearish candle, same concept. This is a wick, this is the body, another wick, but it's the opposite way. It opens from the top and it closes from the bottom. All right? Very simple. Nothing crazy. So far, all you know is a bullish candle opens from the bottom, closes from the top. A bearish candle opens from the top and closes from the bottom. And it got wicks. Let's see an example, quick example. This is a quick example of a bearish candle. It opens from the top, closes from the bottom. And a quick example of a bullish candle. This is a bullish candle. Opens from the bottom, closes from the top. Right? This is called a wick. This is called a wick. This is called the wick, this is called the wick, and this is called the body, this is called the body. Simple. Simple, simple, simple. Now, we have also, sometimes we see candles with no wick. Like, when you see me drawing this, you see, okay, it has a top wick and a bottom wick. But what if a candle has a no wick? What do we do in that case? What does that mean? Like this one, for example. You see? This bullish candle has a wick, has a body, but where's the second wick? Doesn't have one. Why? I'm gonna tell you. And by the way, there is an indicator for the no-wick candles, so don't worry. But I want to explain to you everything before I move to the indicator, because I want you to actually understand what's going on. Let's say your friend asks you, yo, what do you trade? And you tell him no-wick candles. And then he tells you, what is a no-wick candle? And you don't know. You tell him, yo, I use an indicator. That's lame, right? I want you to understand what's going on first, and then you can show him the indicator. So the no-wick candles, let's say now on USD JPY, only 6.9% of bullish candles close with no bottom wick, with no wick. and only 6.3% of bearish candle closes with 6.3%. 6.3% of bearish candles close with no wick. What does this mean to us? Of all candles in the history, on the 15-minute time frame, closes with no wick. So imagine this whole strategy is based off 13% of candles. That's it. We came up with this whole strategy based on 13% of candles, which is mad if you ask me, but that's it. All right. So a bullish candle, to count as a no wick candle, it has to have a no bottom wick. All right. For a bullish candle to count as a no wick candle, it has to have a no bottom wick. Would you say this is a no wick candle? Look, it has no top wick. No, it's not a no wick candle. Why? Because for a no wick bullish, for a bullish no wick candle to be a no wick candle, it has to close up. It's probably in the camera's way. Here. Would you say this is a no wick candle? No. Why? Because for a bullish candle to be a no wick candle, it has to have a no bottom wick, like this. This is a no wick candle, but this is not a no wick candle. Same concept for the bearish example, but the opposite way. For a bearish example to count as a no wick candle, it has to have a no top wick, like this. Okay? So would you say this is a no wick candle? No, it's not. Why? You're gonna be like, yo, Omar, but it has no top bottom wick. I know. But this is a bearish candle. So for a bearish candle to be a no wick candle, it has to have a no top wick. Cool? On the same page, you can take a screenshot of this. For a bearish candle to count as a no wick candle, it has to have a no top wick. For a bullish candle to count as a no wick candle, it has to have a no bottom wick, like this. And don't worry, there is an indicator. Like, you're not gonna be thinking about these stuff when you're trading. So, let's see. You see this candle, for example, it has a small wick, but it has no wick here. Is this a no wick candle? No. Why? Because then it has a small wick from the bottom. Now, there's one important thing I want you to know actually before I tell you what the name of the indicator, so you know why we use this indicator. Let's say this candle right here, all right? Is this a no wick candle? Let me point at it properly. Boom. Would you say this is a no wick candle? Because it's a bullish candle and it has no bottom wick. So why is it? Would you say it's a no wick or no? Now you probably said yes, right? And I would understand why you would say yes. You're looking at it, okay, it has a top wick but has a no bottom wick. Now, the truth is this is not a no wick candle. Why? When you zoom into it and zoom and zoom and zoom, oh shit, what is this? What is this small piece right here? This tiny piece. It's a wick, right? So you're like, oh yeah, he got a point. But lucky us, so we don't have to zoom in every single time we're gonna see a candle, if it's a no wick candle or not. There's this indicator. It's called X Ghost Wickless Candles. You can take a screenshot of it, put it on your trading view. It's very important. Like, this is a must, okay? This indicator basically automatically tells us which candles are a no wick candle and which candle is not a no wick candle. Okay? That's it. So you can see here, this is a no wick candle, this is a no wick candle, this is a no wick candle, this is a no wick candle. Got it? You see, no wick, no wick, no wick. It gives you like that small arrow on it. So this is a very important indicator you use. So unless if you want to keep zooming in every single time, which is impossible. So yeah. And for the settings, I have the same settings. I just changed the color of this. You could do the same if you want. If you don't want, it's okay. I just like to have it like this, so I know if it's a bullish no wick or if it's a bearish no wick. Like, just so I can see it faster. That's it. So yeah, now you know what a no wick candle is. That's it. Like, that's what a no wick candle is. And before you start itching, yo, yes, I know what a Noah candle is. I'm ready to start itching, to start trading. No, you're not, bro. You gotta wait. This is like lesson 101. Like, we haven't explained anything about the strategy yet, all right? So hold your horses, cool your beans. We're still not there yet. So yeah, that's it for Noah candles. Yeah, and one more thing I wanna talk about right now before we start. It's very, very important that you watch this video from the beginning to the end. Why? Because I know this is boring. If you're advanced, if you've been trading in Noah candles, you're gonna be like, yo, Omar, I know this already. Why are you explaining this to me? I know, bro. But I made the video in a way where everything is connected. So if you don't understand point A, you're not gonna understand point B. And if you understand point B, you're not gonna understand point C. So I don't want you to reach the strategy part and then you hit me up with, what does Omar mean with this? And then you have to go back all the way and then rewatch the whole thing. That's why it's very important that you watch them in this order. Because I made it in a way where everything is connected, by the way. If you don't understand one thing, please rewatch that thing until you understand it. Like, if you don't know, if you didn't understand what a Noah candle is, rewatch this part. Because what am I explaining in the future, you're not going to be able to understand. Does it make sense? And I made it in a way where everything is directly correlated. Everything is connected. So it's very important that you watch it in the chronological order. That's the word. Anyway, I want to add one more thing actually, which is, this example is for Forex for now. I'm gonna talk about it later about the crypto and all of these. But for Forex, let's say we're gonna trade USD JPY, right? It's very, very, very important that you use Oanda. Now, I don't trade on Oanda as a broker. Like on my MetaTrader, I don't trade Oanda. But when I analyze only on Oanda. And I'm gonna tell you why. Like basically I put Oanda on TradingView. The broker is Oanda. You just like, let's say you want to trade USD JPY. You write USD JPY. You have to always choose Oanda. Okay? And I always analyze on TradingView. And let's say, for example, I want to take this setup. I put a buy limit, put my stop loss, put my take profit 1-to-1. And then, I'm gonna explain this later. And then I just see it, okay, boom. I go on my phone, I put a buy limit and put my stop loss, put my take profit, and that's it. So it's very important when you read the charts, it has to be Oanda. Now, why am I saying this? I'm saying this because look what would happen. I actually put it down there. If you use FXCM, you see this candle right here? This is FXCM, okay? Look on USD JPY on Oanda. On Oanda, this candle shows that it has a small wick, right? Because the indicator, if this was a complete no wick candle, the indicator would have gave us an arrow. But it didn't. So when I zoom in, and zoom in, and zoom in, and zoom in, here, and let's see, zoom in a bit more. Oh shit, it does have a wick. You see, it has a small wick. But on FXCM, it doesn't have a wick. Now you're gonna be like, okay, Omar, but for the people who know this strategy, on FXCM, you would have entered buys here and you would have a hit take profit. So you're gonna be like, yo, Omar, but I would have made money if I used it on FXCM. That's true, bro. But at the same time, you would have also lost a lot of more trades. So let's say here, on Oanda it shows it has a wick. On FXCM it shows that it has a no wick. There's also something very, very, very important you take into consideration. You see? Like, look, this one would have lost on FXCM. But on Oanda, you wouldn't have taken it because it's not a no wick. So it's always important that you use Oanda. And also, I realized this mistake that you guys are doing because some people sometimes tell me, yo, Omar entered buys here, but I lost the trade. They hit me up on IG. So I tell them, okay, send me a screenshot of this. Or one of my students, they tell me, yo, I lost this trade today. I'm like, all right, send me the screenshot. They send me the screenshot, I go on TradingView, I can't find it. Why? Because you're using FXCM or Pepperstone or whichever broker. You're not using Oanda. Now, FXM does show more no wick candles, but look guys, we're here to build a community, right? We're all gonna be trading the same way. I want when I win, you win. When I lose, you lose. So we're all on the same page. I backtested this strategy over years and years and years of data. And I did it on Oanda. So I'm certain that Oanda works. Why fix something that's not broken, right? I had a period where I had both of them because I was a greedy guy and I wanted to make money on as much money as I can. So I was trading Oanda, FXCM, everything. But that would just cause you a headache because sometimes you're gonna see a trade on FXCM but not on Oanda, and sometimes you're gonna see a trade on Oanda, not FXCM, and then you end up taking the trade on Oanda and you're like, I lost. I should have listened to FXCM. FXCM didn't have a wick. It had a small wick, so I wouldn't have taken it. And then the opposite would happen the next trade. On FXCM, it's gonna be a no wick candle, and you're gonna lose. But on Oanda, it has a small wick, so you're like, man, I'm gonna stick to Oanda next time. Just so we don't get into that confusion, stick to Oanda. Alright? I shouldn't have talked about this too much, but I have to convince you because you guys, you don't even understand how many people try to change this just because they're itching for trades. I hope I didn't miss anything. Alright, I'm gonna go take a small break, and after that we're gonna continue with the trends. Alright, I'll see you soon. Alright, perfect. Let's see. Alright, everything is perfect. Let me test the mic. Yep, perfect. So now we're gonna continue the video with the trends. So the way I identify trends, we have two types of trends, alright? We have external and we have internal. As usual, we're gonna draw first and then we're gonna move to the real charts. So we're gonna start with the external trend. So this is an external uptrend. You know what? I'm gonna start with the external uptrend, then external downtrend, then I'm gonna show you on the charts, and then we can move on how trend reverses and all of that. So this is called an external uptrend, right? It consists of, what does an external uptrend consist of? Low, first low, high, higher low, we call it HL. It's not we. Who's we? That's what it's called. Higher high, HH, then higher low, then higher high, and so on. Okay? So it's very easy, guys. An uptrend, now we just talking about the external uptrend, all right? An uptrend, or like, let's say for now you still don't know external and internal, this is the uptrend. An uptrend consists of low, high, higher low, higher high, higher low, higher high. Now why is this called higher high? Because this high right here is higher than the high right here. Why is this called higher low? Because this low is higher than this low. Now, do you really need to know this? Not really. But just all you gotta know is an uptrend consists of higher lows and higher highs, higher lows, higher highs, higher lows, higher highs, higher low, higher high, higher low, higher high. All right? That's all you need to know for an uptrend. Higher low, higher high. Now, it's very important that you know them though. Now, I wanna talk about one thing that not a lot of people talk about. What is this right here? Now you might be thinking, okay, this is a higher low. Why? Because Omar said a higher low happens when the low is higher than the one before it, right? Well, technically you're right, but this is not a real higher low. This is a potential higher low. Okay? This right here is a potential higher low. Why am I saying it's a potential, not a real higher low? Because we still didn't break the highs. So, once we see a candle closing above the previous highs, that's when this becomes a confirmed higher low. Got it? Let's do another example. What is this? Is this a higher low? Not yet. What about now? Is that higher low? Not yet. What about now? Is it a higher low? Yes, it is. Why? You remember how in the first, in the beginning, I was telling you a bullish candle opens from the bottom and closes from the top? You remember that? You see, this candle closed above the highs. What does this mean? that means this is an official new higher low. Okay? This is very important. So what about now? Is it a higher? Is this a higher low? No, it's not. Why? You're gonna be like, yo, Omar, but it wicked above the previous high. Yes, it did, but I never closed above the most recent high. So until we close completely above the most recent high, this doesn't become a higher low. Let me write it down so you can take a screenshot of it. For a higher low to be confirmed, we need to break the most recent high. Okay, for a higher low to be confirmed, we need to close above the most recent high. Wait, if you're taking a picture, wait, let me smile at this. Oh, wait. Alright? So for a higher low to be confirmed, we need to close above the most recent high. Let's see if we can find a quick example of this. And by the way, everything I'm explaining to you will also have an indicator, as you can see here. But I still want you to understand it because the indicator does a lot of mistakes. Like, it does a lot of mistakes, and it's only good to read the external trend. It doesn't read the internal trend. You get what I mean? So, which is I'm gonna be talking about directly after this, actually. But for the external trend, you see, look, low, high, higher low. You see, like, this is a mistake. Wait, let's remove the indicator actually. Higher low, higher high, right? And then we created the low, lower high, lower low. Now, would you say this is a higher low right here? No, it's not. Why? Because we never closed above the most recent high. Like, you see, we didn't close above here. If we closed above here, this would have become the higher low. You see what I mean? And then you see the trend low-key shifted. Now, if we're gonna keep going on the external trend, so after all of this move, this is the higher low right here. And then we have another low, a new higher low, higher high, then new higher low, created the internal structure, and then boom, higher high. You see what I mean? So this is the higher low, this is the higher low, and we created the higher high. Let's see if we can, no, I haven't explained the downtrend yet. It's very easy, guys. It's very easy, but it's very important. Like, you genuinely, I'm being genuine right now, you really need to understand this because the no-wick strategy is good, but it's more of an entry model. If you don't really understand the trend and how the trend moves, you're never going to be able to use the strategy properly, okay? I'm being completely transparent with you now. So now I hope you understand the uptrend. I'm gonna just do it real quick again. Real quick. I want to make sure that you guys actually understand. Low, high, higher low, higher high, higher low, higher high, higher low, higher high. Okay, this is an uptrend. This is a higher low, higher high, higher low, higher high. Is this a higher low? No, it's not. Why? Because we still haven't broken the highs yet. So until we break the highs, this is the higher low. What about now? Now it's a higher high. Okay, cool. If a bullish candle shows up, just wicks above the high, but never closes above the previous high, does this count as, okay, became the new higher low? No, it doesn't. Like this. You see, we didn't close above it. So this is still not the higher low. Once we close, that's when we say, okay, this is the official new higher low. All right? Now let's do the downtrend. If you didn't understand the uptrend, you're probably gonna understand the downtrend because, damn, I repeated this thousands of times already. The uptrend is basically when the trend is moving up, right? Some people call it bullish trend. A bearish trend or a downtrend is when the trend is moving downward, like here. What does it consist of? It consists of a high, low, lower high, lower low, lower high, lower low. Okay? So you remember how we used to say in the uptrend we have higher lows, higher highs, higher lows, higher highs? In the downtrend we have lower lows, lower highs, lower lows, lower highs. Why is this called a lower high? Because this high is lower than the high before it. Why is this called a lower high? Because this high is lower than the high before it. Why is this called a lower low? Because this low is lower than the low before it. Why is this one called a lower low? Because this low is lower than the low before it. All right? Very easy, very simple. Now, I want to see actually how you think. Would you say this is a lower high? Answer it. Think. Would you say this is a lower high? Just remember, it's the same concept as the uptrend, but the opposite. I haven't talked about it yet. So if you get that wrong answer, don't worry. It's okay. Is this a lower high? No, it's not. It's a potential lower high. Why? Because we still haven't closed below the lows. You remember how here we're saying, okay, this is not a higher low because we didn't close above the highs. Here, this is not a lower high yet. In this case, it's not a lower high yet. Why? Because we still didn't close below the lows. What about now? Is it lower high? Yes, you see, now you understand it. You got it right. This is the lower high. Okay? Let me do you a quick test. Red candle. Let's say boom. Let's remove this. Oops. Yeah. So after price, let's say, came back, retraced. God damn, I can't draw no more. Boom. Is this a lower high right here? Or right here, is it this the lower high? It's a potential lower high. It's still not a lower high. Why? Because we wicked. You see, only the wick went down. We never closed below the lower lows. What about now? Is this a lower high? Yes, it is. Why? Because we closed below the lows. Now, let me show you what I mean with the close. You remember when we were talking about earlier? You remember when we were explaining the candles, how they open, how they close? We said here, this is where a candle closes. That's exactly what I mean here. You see now, the candle closed below the lows. It's all right. This became a lower high. But now, the candle didn't close below the lower low. So it's still not a lower high officially. Okay? So let's write this down so you can, I don't know, if you're taking notes, so you can write it down. In a bearish trend, or in a downtrend, a lower high is confirmed only after we close below the most recent low. Okay? In a downtrend, a lower high is confirmed only after we close below the most recent low. The most recent means like basically the last low we have. So in this case, now it is confirmed. Well, now we can add here lower high. All right, sounds good. Same concept here. For a higher low to be confirmed, we need to close above the most recent high. After we close above the most recent high, boom, now we can call this a higher low. Cool? Cool. Let's see if we can find an example of the downtrend. Yeah, this is a good example quickly. See, we have a high, we have a low, we have a lower high, we have a lower low. We have a lower high, and we have a, you see? I almost got you. If you stopped and got confused, you're right. Is this a lower high? No, it's not. Why? Because we still didn't break the lows yet. You see, we didn't close below the lows. So until we close below the lows, now this would become a lower high. You're starting to get it? Maybe I could do one more example. Oh, this is a good example, actually. This is a good trend. So we have a high, we have a low, lower high, lower low, lower high, lower low, lower high, lower low, And yeah, that's what we're gonna talk about actually soon. What happened here. All right, perfect. Let me see what else do we have. External trend, done. Higher time frame, shift and reverse. Okay. So is it clear now though? I'm asking as if we're in a meeting. I'm used to teaching my students. Like when I have my students usually on a call, I always ask them these type of questions. Like, is it clear? You know, I do these quizzes like, yeah, is it right? Is it wrong? Do you understand what I meant? And I always try to fool with them like, yeah, this is a higher low. And then if they confirm with me, that's how I know. Okay, they're just saying yes because they want to, because I said it. But sometimes I purposely do it wrong, so I see if they actually locked in or if they just saying yes because I said it. Shout out to them, man. All right. Now we're gonna talk about. I think now it's very easy. Now we understand. Boom. We understand the uptrend, how it's formed, highs and lows, higher lows, lower highs, and we understand that a downtrend, what a downtrend forms of, lower highs and lower lows. Now, how do we know that the trend shifted? Oh yeah, and actually, wait, before we go to that, there's one more trend. It's a horizontal trend, or some people call it consolidation. Trends like this, when the market is not going up and it's not going down, it's neither uptrend nor downtrend. So what is it, Omar? Some people call it horizontal trend, and some people call it consolidation. Basically, price is not moving much. So in these type of cases, we just don't trade. That's why I forgot it. Like the consolidation, we try to avoid them. Like when price is just moving like in a one, like doesn't have a certain direction. Let's see a quick one, so we don't forget. Like this, for example, right here. Like here, this area is consolidation. See, this one is perfect. You see this area right here? You see how the price is not going up and it's not going down? This is consolidation. No trend, basically. All right? And we try to avoid trading these because we can't predict where the price is going to go. Now, I'm going to tell you how price reverses. How do we know, okay, now we're not in an uptrend no more. Now we're going to become in a downtrend. Or how to know, okay, we're in a downtrend, but we're going to become an uptrend. Like how do you know that trend is shifting? It's called change of character. Now, right? Low, high, higher low, higher high, higher low. Once price closes below the most recent higher low, this is called change of character. Okay? So this right here is called change of character. Cool? That's when you know when the trend is shifting from an uptrend to a downtrend. Now, I like to use the 3 steps verification, which is basically how I know that the trend is fully shifting from an uptrend to a downtrend. Because, look, after we close below the most recent higher low, now you could officially say, yeah, we're in a downtrend. But market makers, they know that we know this information. They know that once we see a closure below the most recent higher low, we're gonna start selling. Because that's what people do usually. After a change of character, people start selling. So what they do is, like, all right, people are selling here, they don't want us to win, they push price up. And this is called a fake out. Now, do I still trade these? Yes, I do. I'm gonna talk about them more later in the video. They just have a lower win rate than the official downtrend. Like when we trade these, it has a way less win rate than when it's a clear downtrend, which I'm gonna be talking about later, okay? So that's why it's important now you understand everything I'm gonna be talking about so you can understand what I'm gonna be talking about later. So when we close below the most recent higher low, this is called change of character, and now we can say, okay, now the trend shifted from an uptrend to a downtrend. But it's still not 100% confirmed. I mean, there is no 100% in trading, but it's still like low probability that we're shifting from an uptrend to a downtrend. It's still higher chance that we're gonna shift, but still not confirmed. Now, how do we confirm? What is the 3 steps verification? Switching, from an uptrend to a downtrend. Step number 1, closure below the most recent higher low. Yeah. Or most recent, it is the higher low, below the most recent higher low. Step number 2, respecting the highs. Step number 3, closing below the lows, BOS. Change of character. Perfect. So first step, like this is the most confirmed that, okay, now we switch from an uptrend to a downtrend. That's where I start achieving my 90% win rate. So here we have the first step, closure below the most recent high low, change of character. I just want to make one thing clear. When I say closure, I don't mean wick. Is this a change of character? No, because we said closure below the most recent higher low, guys. Closure. So we need to see a closure like this. Now we have a change of character. Now we can say, okay, we switch from an uptrend to a downtrend. Cool? It's very easy. We need to see a closure. So that's step number 1. Step number 2, we need to respect the highs. What does that mean? Boom. We can respect them. We don't go and close above them. Because now if we close above the highs, we're back in an uptrend. You see, like now we're technically in an uptrend again. So I need the respect of the highs. So the price shouldn't break or close above the previous highs. So that's step number 2, respecting the highs. Step number 3 is closing below the lows. Closing below the lows, which is this one. And that's when we say, okay, we're in official downtrend. Now, let me actually do this. Boom, boom. I'm going to show you why it's like this. Because look, after we close below the higher low, change of character, right? We respected the highs. Cool, that's the second step. We broke the lows. Cool, that's the third step. Now, let me take this a bit to the side. What does this look? What does it show you? Look at it. Doesn't it look familiar? High, low, lower high, lower low. Isn't it familiar? High, low, lower high, lower low. Now we're in official downtrend, guys. Official downtrend. Okay? Now we're in official downtrend. And I want to just to point out one thing actually quickly. This right here, when when we continue in the trend, it's called breakout structure. This is not very important, but in case you want to know it, you could know it, like if you want to. So when we break the lows, it's called the breakout structure. And now let's say we go up, then we come back here. What is this called right here? Breakout structure. Why? Because we just continue in the trend. Okay? Easy, clear. I hope so. Let me do you, and if you didn't understand it, don't worry, you're gonna understand it now because I'm gonna basically repeat everything, but instead of the uptrend, the downtrend. Switching from a downtrend to an uptrend. I hope you took a screenshot of that, of the 3 steps verification. Closure below the most recent lower high, respecting the lows, closing above the highs. So, to switch from a downtrend to an uptrend, it's exactly the same concept, except it's gonna be the opposite way. Let me do this so you can see it more clear. And boom. Like this. Yeah. Perfect. So we're in a clear downtrend, right? High, low, lower, high, lower, low, lower, high, lower, low. Let me just mark out this one because that's the one we care about for now. Right? First step, when do we switch from a downtrend to an uptrend? Once we close above the most recent lower high. Where is that? Here. Boom. What is this called? It's called change of character. Change of character. Cool. Now, are we in a downtrend or an uptrend now? Now we're in an uptrend. It's just not confirmed yet. Like I would say here, I'm 70% sure that we're in an uptrend, but I'm still not sure. I'm still not 100% sure. Like I'm still not certain. I'm just saying, okay, we are in an uptrend, but it's still not 100% confirmed. Now, when will I be, okay, it's confirmed? Once we do this, that's step number 1. Step number 2, respecting the lows. So we don't go down and close below the lows. No, we just respected it. Step number 3, we break the highs again. Boom. And now if we take this to the side, what would it look like? Low, high, higher low, higher high. You see now in a clear uptrend. You guys have been asking me about this for a while now. I'm sorry for being this late actually. But I had to do it. So this is the high. This becomes the higher low. And this becomes the higher high. Okay? Let's do it like this just so. Now, after it broke the high, what is it called? If you don't know, it's okay. You don't need to go back and watch everything. It's just like so you know. If, in case I'm teaching you this, in case I ever mention the word, I want you to know what do I mean by the word that I said. That's it. What is this called? It's called breakout structure. Okay? Cool. And what is this called right here? Boom, boom. What is this called right here? Breakout structure. Exactly. Now, let me ask you actually a quick question to see if you're following up or not. Is this right here a higher low? Nope. Is this right now here a higher low? Nope. What about now? Is it a higher low? Yes, it is. Why wasn't it a higher low before? Because we still didn't close above the most recent high. Okay, but now when we do, we're chilling. What else do I need to say about the change of character? Now you know the 3. So now you know the 3 steps verification. You know what a change of character is. You know what breakout structure is. You know how we switch from a downtrend to an uptrend. In case you want to take a screenshot of it, here you go. You can take a screenshot of this. Okay. You can take a screenshot of this as well. It's very important you do in case you forget them, so you can learn them. Cool. We still have actually one more thing about trends, and then we're good with the trends. Let me see if I can. Okay, and put the indicators. So that's gonna make my life easier. You see, every time we continue the trend, you see every time we break a highs, we call them breakout structure. See, we broke the highs, we call it breakout structure. We call the highs, we call it breakout structure. And let's say here in the downtrend, we broke the lows, we call it breakout structure. Got it? Now let me see an example of when the trend shifted from a... Okay, perfect. This is the downtrend, right? Oh my God, this is a perfect example. So we're in a clear downtrend, high, low, lower high, lower low, lower high. Like I'm just doing it now randomly. Like don't like I'm just going fast through it. Boom, boom, right? So this is the downtrend, highs, lows, lower highs, lower lows, lower highs, lower lows. And then look what happens, guys. We close above the most recent lower high, right? You see it? It says even here with the indicator, which I'm gonna give you at the end. We close above the most recent lower high. What does this mean? Change of character. We switch now from a downtrend to an uptrend. And now you can see like the price, how the market started moving and just kept pushing up. Got it? Very easy, very simple. And usually, guys, I don't trade the external trend, by the way. I just literally focus on the internal trend. Like when I'm looking at this, I look at this trend inside. I look at this trend inside. I look at this trend inside. I don't look at that, like, I don't just zoom out like this and look at the trend. No. I look at it from the inside, like, I zoom in, and that's how I start looking at the trend. Like, okay, high, low, lower high, lower low, lower high, lower low, lower high. we never broke, and then we came up. You see what I mean? And then when I take it away, I'm gonna start looking, okay, high, low, lower, high, lower, low, lower, high, lower, low, lower, high. Ooh, what is this? And then, oh shit, now we're forming an uptrend. And this was the internal trend, which I'm gonna be talking about soon. Okay, so now you know what a downtrend is, what an uptrend is, how do the trend shift, and the 3 steps verification, change of character, break of structure. And now I just gotta explain to you what is the internal trend. I'm gonna just go bring some water, take a break, and then I'm gonna come back and I'm gonna explain to you the internal trend. And actually, I'm gonna sum up everything about trends like quickly, because like I'm gonna explain every single concept, and then I'm gonna put them all at once. All right? Because I know you guys would forget some stuff here and there. So let's do it. See you in a couple of minutes. All right, so welcome back. Let's see. So I took my break, and now it's time to lock in again. Let me see if my camera is good. Yeah, it's good. Perfect, perfect, perfect. So now we're gonna talk about internal trend, okay? We're gonna be talking about internal trends. Goddamn, I need the empty spot. Okay, cool. This is something that not a lot of people know, not a lot of traders online talk about. It's something I would say, I don't want to claim nothing, man, but how would I say it? So I just basically learned the trend, like online and stuff, but like before making the strategy. But this part, I just realized it by myself. Now, of course, there will be some people who are talking about it, but yeah, I never met someone who talks about it. So that's why it's a bit interesting. Interesting, I would say. Alright. Boom, boom. Okay, so this is an uptrend, right? Right? Right. Wait. This is a clear uptrend. We have a low, high, higher low, higher high, higher low, higher high. Until now, you should know this. Now, is this right here? Would you say this is a higher low or no? This right here. Is it a higher low or not? No, it's not. Why? It's a potential higher low. Why? Because we still didn't close above these highs. We talked about this 1,000 times, right? Now, what if price does this, right? So far, this is not a higher low, right? And then this. And then this, and then this. Now, according to the rules, we said an uptrend shifts only after we close below the higher low, right? That's what we said before. Where did we say it? This was for the downtrend. Here, we said an uptrend shifts from an uptrend to a downtrend only after we close below the most recent higher low. Now, in this case, what happened? Are we in an uptrend or in a downtrend? Because this is an uptrend, and we're still having closed below that most recent higher low. So this can't be a downtrend, right? Like, this is not a downtrend, because the downtrend happens only after we close below the higher low. That's how I explained it to you guys. But let me take this a bit to the side. What does this look to you? Doesn't it look familiar? Doesn't it look like a downtrend? Doesn't it look like a high, low, lower high, lower low, lower high, lower low? Right? It does. It does look like a downtrend. So now you're gonna be like, okay, Omar, you're confusing me. Are we in an uptrend or are we in a downtrend? Because here we're in an uptrend, but here we're in a downtrend. But no, we can't be in a downtrend because we still haven't switched the trend from an uptrend to a downtrend. You told us once we close below the most recent higher low, that's when we say, okay, we shifted from an uptrend to a downtrend. So what do we do now? I'm telling you, it's all right. Don't be confused. I used to be confused back in the days until I made this. So this is called, by the way, a leg. So each move, it's called a leg. And by the way, I forgot to say this. This is called, what was it called? Like the push, and this is called a pullback or retracement. I'm telling you this so when I use this word, you know what I'm saying. So this is a push, this is a pullback or retracement. Push, pullback, push, pullback, push, pullback. Okay? Now, although we're in an uptrend, this right here became a downtrend. So what do we do in this case? Are we in an uptrend or in a downtrend? This is how it's gonna happen. What's gonna happen? This right here is called external uptrend. Okay, so the external trend is uptrend. This right here is called internal. So this is an internal downtrend. Got it? So the external trend is uptrend, the internal trend is downtrend. How do you use each one of them? I will tell you later. But if you see this and you're confused, are we in an uptrend or a downtrend? Well, externally we're in an uptrend, internally we're in a downtrend. Once I explain the strategy, I'm gonna show you here we can take sells. It's alright, it's normal. Like if you see a no wick candle, bearish no wick candle here, yes, you can take sells based off the internal trend. So when you're gonna enter sells, your stop loss is gonna be based off the internal trend and one-to-one. That's something I'm gonna talk about later, don't worry. I'm just saying this for the people who already know the strategy. Now, what about if there is a no wick candle here? Because technically, we're in a bullish trend externally, and we're still good to go, right? Well, yes, same concept. You can take buys here, and you have your stop loss based off the external trend, like this. Got it? If it's your first time watching this video, don't be scared. Like, yo, what is going on? Don't worry, I'm explaining it later in the video. I just wanted so people who know the strategy, I want them to know what's the difference between external and internal trend beforehand. But for now, all you need to know is this is how an external trend is, and this is how an internal trend is. Okay? And for the ones who know the strategy, I'm gonna tell you what's the win rate on this one and what's the win rate on this one, because they don't have the same win rate, unfortunately. All right, let's do the downtrend example. Here we're in a clear downtrend, right? Boom, boom, boom. Is this a lower high right here or no? Because you see we have a high, low, lower high, low, low, lower high, low, low, lower high, potential lower high. No, it's not. Why? Because we still didn't close below here. All right, cool. So what happens now here? Are we in a downtrend or in an uptrend? You tell me. Because here, when I look at this trend, I'm gonna see it as low, high, 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 low, lower high, lower low, lower high, lower low, almost potential lower high. And then we have a higher low, higher high. So now here, on the last step, we have a low, high, higher low, higher high. Because that's how it looks. Low, high, higher low, higher high. Got it? So external trend is downtrend. Internal trend is an uptrend. And then we can expect price to do this. Boom, boom, boom. And once we break this part right here, that's when the external trend also shifted. And that's when we say, okay, external trend is not a downtrend anymore. And yeah, we're an official uptrend. Cool. So let me just chart out here again. So this is, let's say, the downtrend. Okay, we know we're gonna switch the external downtrend once we break this point. But if we see something like this, okay, externally we're in a downtrend, internally we're in an uptrend, and then we could see something like this. If that happens, the external trend is still in a downtrend, because look, this leg right here, we're in a downtrend. This leg right here, we just came back, retraced, and this leg right here, we continue the downtrend. So externally, we're still in a downtrend. Why? Because we have external downtrend, okay, internal uptrend, but we don't care. We call it a pullback. Just price decided to do a pullback with an uptrend, and then boom, price came back down and continued the external downtrend. Got it? And now this, for the external downtrend, this would be the lower high. Because that's how, look how the trend looks like right now. Boom. And this would all count as one leg, and then boom. Okay? So we're done basically with the trends. That's all you need to know about trends. That's all I look at trends. I'm gonna make a quick summary of everything I know about trends now, maybe in less than 5 minutes. And then I'm gonna show you a clear example, and I'm gonna show you the indicator, and then we're done with the trends and we can move to the next stop, okay? So an uptrend consists of higher highs, higher lows, higher highs, higher lows. And then an uptrend switches only when we close below the most recent higher low. That's called the change of character. Now, this is the first step. This I call it a reversal attempt, because the trend is attempting to reverse. It's still haven't confirmed. It's more here, we're more leaning toward downtrend than uptrend now, but we're still not 100% sure. And then second step here, we respect the highs. Third step, we break the lows, and now we have an official downtrend. High, low, lower, high, lower, low. And we can expect price to make a new lower high, lower low, new lower high, new lower low, new lower high, new lower low. Until when? Until when, like now we're in a downtrend, right? When does this trend end, shift? Once we break the most recent lower high. So this one. Boom. What would this be called? This would be called change of character. Okay? And same concept. Now, in an uptrend, a higher low is only confirmed when? This high low is only confirmed when? Once we close above the most recent high. That's when this will become a new higher low. So is this a higher low? No, it's not. Is this now a higher low? No, it's not. What about now? Yes, it is. Same concept for the downtrend. Is this a lower high? No, it's not. Is it now a lower high? No, it's not. What about now? Yes, it is. Now, the reason why we need the 3 steps verification. Okay, first step, now we have it done. Second step, wait, what? Yeah, I talked about this, fuck. Second step is respecting the highs, and then third step is breaking the lows. What else? Yeah. Same concept for the downtrend. I talked about it. Fuck. Yeah, the internal, I swear I've been talking for too long that I got tired. I think after this I'm gonna go eat and then I'm gonna continue. So for the internal trend, this is an uptrend, right? And then, is this a higher low? No, it's not. Is it a higher low now? No, it's not. You see why it's very important to break the highs first? Why is it important? Because what if price decides to do this? Boom. Now we have an internal downtrend. So although the external trend is uptrend, the internal trend is downtrend. So we have high, low, lower high, lower low. And then price would most probably do this, 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 this. Until now, external trend is still in an uptrend, and internal trend is still in a downtrend. Cool? Now, before I answer, when does the external trend become a downtrend as well? Because look, it's the best when we have the external and the internal going the same way. Like, I don't like this. Like, this doesn't have a 90% win rate. When you trade this, an external against the internal, we don't have a 90% win rate. I'm gonna tell you the exact win rates afterwards. Okay? Now, when does the external trend end? Like, when do we say, okay, this external trend we switches to an internal trend? You tell me the answer. This external trend will become a downtrend once we close below here. So if price decides to, okay, let's keep going, boom, now we can say, okay, now external trend is in a downtrend and internal trend is in a downtrend. We're really good to go, because now the external and the internal is in a downtrend. Okay, same concept, because I didn't mention how does the internal trend shift as well, right? So let's say price does this. External trend in this case is still uptrend. Internal trend is still downtrend. Now, what if we never break this? When do we say, okay, the internal trend shifted? The internal trend would shift here. Boom. So once we close above this most recent lower high of the internal trend, that's when we say, okay, the internal trend shifted, and now same concept, we can see something like this. And only after we break these highs, we can have an official external uptrend continuation. So now we have the external trend would be this, and then this would all be one pullback, one leg, and this would be all one leg. So the trend, you can imagine it as if it's like this, and then this whole small movement as if it just happened like this and like this. Cool? Let's do another example on the downtrend in case you didn't understand this part. So this is how a downtrend would look like externally. And let's say it internally does this. Cool. If we break this right here, because look, when you zoom in, you're gonna see, okay, this is the internal trend. Low, high, higher, low, higher, high, higher, low, higher, high. Once we break this right here, this most recent higher low, that's when the internal trend shifts from an uptrend to a downtrend. Cool? And then we can expect price to do boom, boom. And now external trend would be this one. And this would be one leg of the external trend. And this would be the continuation. Right? Very easy, very simple. Don't overthink it, because there is an indicator for all of what I said. Now, I had to tell you all of this because sometimes the indicator does mistakes, and I don't want you to fall for these mistakes. You know what, let me just do this. Okay, so this is the indicator first of all. It's called Break of Structure / Change of Character by Nephew Sam. I don't know the guy, I'm not sponsored by him. I'm not getting paid for him. It's completely for free. And yeah, you should, it's up to you if you want to use it or not, because it's not 100% accurate. So let me just show you how I read the trend. Now, we're not talking if what's supposed to happen is happening. We're just talking about the trend, right? So the way I would read the trend is low, high, higher low, higher high. An easy way to see higher lows for the people who don't know is once you see a red candle followed by a green candle, you could count this as a higher low. And to see a lower high, when you see a green candle followed by a red candle, that would be a lower high. Now look, my strategy is pretty mechanical. Everything I do, you would do. Just the trend part, that's a bit difficult to make it mechanical, but that's what I'm trying to teach you. I'm trying my best to teach you how I read trends, okay? Like, this is the only part that's discretionary, I would say. So this is a higher low, this is a higher high. Then here, boom. You see, here we created an internal downtrend, right? So we have the clear uptrend. And then look what happened here. We have a high, low, lower high, lower low. You see, we created an internal downtrend, sorry. And then, but it didn't matter. Why? Because the external uptrend ends here. So what happens after? We continue, we push up, and we fix the external uptrend. Then we have a higher low, higher high, higher low. And you see, for example, here it says higher low, but this is not a real higher low. Why? Because we still haven't broken the highs. So this is the real higher low until we break the highs. And yeah, the trend just continued up. Let's see what happens after. Yeah, oh shit, my camera's in the corner. You see what I meant here? Boom. And then this was a potential higher low. Still not a higher low. Why? Because we still haven't broken the highs yet. And then, okay, here you're like, okay, we never broke the highs, and then we broke the lows. So that's when we have an internal downtrend now. Look how it looks like. High, low, lower high, lower low. So here I'm like, okay, cool. So now we have an internal downtrend, then we have a lower high, I have a lower low. So the internal trend is still going on. You see, high, low, lower high, lower low, lower high, lower low. So here we could start looking for sells. And we can also look the external trend. We could still look for a buy. And yeah, that's it. Pretty much easy. And then here the trend shifted. Once we close above here, the trend shifted from a internal downtrend to an internal uptrend as well. Let's see another example. You know what I'm gonna do? I'm gonna just press like this. I'm gonna press on random bar to show you how, because now I've seen this, so it's easy for me to know what's going on. All right, so look, we have a high, low, lower high, lower low. Until now we're in a downtrend, right? What happens after? Okay, cool. We start forming an internal uptrend. Low, high, higher low, higher high. Then we created the higher low, higher high. So now You see how it says automatically change of character? For the external trend, this is where we officially switch from a downtrend to an uptrend. But already the internal trend was telling us, yo, we're switching. We have a low, high, higher low, higher high, higher low, and now here we confirm. Now, are we in an uptrend or in a downtrend now? Look. We were here in a downtrend, right? And then, that's why I like to draw it, guys. I like to draw on the charts and take them away, because when you see it at the charts, you can't see it properly. But once you move it away, you can see everything more clear. So let's see. The external, okay, so see in here, we were in an external downtrend. Yeah, that's true. And then we start forming an internal uptrend. All right, I see it. But still, we haven't closed above here. So what does this mean? That means externally we're still in a downtrend. Now what happened after? We created a new higher low, and we respected this right here, which is good. And then boom, another push up. So now we're in a clear official uptrend. Why? Because the external trend shifted here from a downtrend to an uptrend, and the internal trend here shifted from, or didn't shift, sorry, it just formed an internal uptrend. So now we have a clear external uptrend, and we have a clear internal uptrend. Okay? And now we could start looking for buys. Okay, nothing much happening. Consolidating pretty much. And then we got this. Right here, so this area is called consolidation. This is the third type of trend that I told you, yo guys, stay away from it. But as you can see here, we're in a clear uptrend. We're still, like, I'm not gonna go over the strategy too much here, because I know some of y'all don't know the strategy, don't know anything about it. So that's why I'm not gonna be talking, okay, yeah, this is a good buys, this is a good sells. Like, I don't wanna say, okay, here you should have sold, yeah, here you should have bought. I don't wanna do it yet. But yeah, as you can see, so here's the higher low for the external trend. But look at the most recent leg. That's the most important, guys. Me personally, I love internal trends because they're fast. They tell you where the market's gonna move before even happening. Look, you see that trend? We're in a clear downtrend here. Because if you guys wanted to just look at the external trend didn't, I mean, yeah, it would have changed character here. So this is where the external trend actually shifted. Because you see we have a low, high, higher low, higher high. This is still not a, or it is, sorry, higher low. You see we closed above here. When we closed above the highs, this became an official higher low, and then price came back and killed this part. So now we have a high, low, lower high, lower low, and this is a change of character. So now internally, high, low, lower high, lower low, lower high, lower low, lower high, lower low. That's internally. Externally, we also broke this part, so we're chilling. And you can see this was amazing. Like, gosh, I just said I wouldn't enter these. But yeah. You see, like, I would have taken sells here at this no wick candle and put my stop loss here and would have hit TP. Same with this one. But never got tapped, unfortunately. It is what it is. Alright, that's it for the trends. And I'm gonna go eat, take a break, because I've been talking for like 1 hour now. Let me see before, so I know what I'm gonna be talking about after when I come back. So now you guys know wick candles, how to put them. You know what an external trend is, what an internal trend is, how do trends shift, how do trends reverse, the 3 steps verification. And yeah, you know a lot now. Actually, now we don't have a lot of stuff left, so that's good. I'm gonna just go take a quick break because I'm actually tired. Bro, at the beginning of this video, it was light outside. Now it's dark. But that's okay. In the Philippines, actually, it takes time to get dark, so which is good. I'll fuck with that. Anyway, I'll see you soon. I hope you learned a lot. I hope now you know what trends are. You guys been asking me a lot about trends recently, like a lot. Like I'm exhausted from the questions. So I thought, yo, let me explain it in depth, and then they would stop asking me these questions. Because this didn't require 1 hour, to be honest. Recording this shouldn't have taken 1 hour. But I wanted to go like, now you basically, as if I took my brain and I gifted to you, and now you know everything I know about trends. But so now you know 50% of that strategy. Imagine all of this for just like 50%. But yeah, I'm gonna stop yapping, I'm gonna go eat, and I'm gonna come back and record the rest. Alright, see you soon. Alright. So welcome now. Why am I even welcoming? I mean, you guys are always welcome, of course. But because in my head, like I went and I came back, so it's like just automatic. I keep on welcoming y'all. Hey, that's a good thing, though. That's a good thing. Keep on welcoming y'all. But I'm not thinking about it from your perspective, because from your perspective, you're probably just watching the video and then boom, this is just like, another clip. But in my head, like when was the last time I was recording? Yesterday, so it's like a new day for me. Anyway, you don't even care, right? Like, what am I even telling you this? You don't even care. Nah, I'm joking. You better care. Alright, so anyway, I'm gonna skip the yapping. Let's move to the next part. So in this part, I'm gonna be talking about imbalances. Now, this concept is, how would they say it? Let's say it's a bonus concept, all right? It's not like a really strong, important part of the strategy, because you're gonna know why later, okay? Let's do this. Let's do this. This part is, I would say, it's more of a confluence, It's not like a really part of the strategy. Like, it is important, but it's not like if you skip this part, you would die, you know what I mean? Like, if you don't pay attention to this, it's gonna lower your win rate, but it's not like everything about the strategy. So pay attention, though. Pay attention. Like, this is something I use to filter out the trades, if it's a good trade or not. So let's say, boom, and this is the no-wick candle. Okay? So in this part, I'm going to be talking about something called imbalances, right? So what is an imbalance? An imbalance is when a price leaves like a gap. Now, ICT traders, they call it fair value gap, but we call it imbalance. Now, what is an imbalance? An imbalance is basically when, let's say you want to buy this phone. This is my phone, you want to buy it, all right? Yeah, now someone's going to hop on and tell me you're flexing your shit. Anyway, so let's say you want to buy my phone. Apple, how does it do it? Let's say, for instance, it costs $1,000, okay? Let's say you're the owner of Apple and you want to sell this phone. Now, if you want to sell this phone, you're going to sell it at 1,000. Now, let's say you get a high demand on this one. What would you do? Would you keep it at 1,000 or would you raise the price? You would probably raise the price, right? Now, for that next iPhone, which is iPhone 18, when you're going to drop it, how much would you charge for it? Are you going to jump from 1,000 to 2,000? Or does it make more sense to jump from 1,000 to 1,500? And then 1,500 to 2,000, right? That's how it makes sense. Now, let's say you jump directly from 1,000 to 2,000. What would happen? People are not going to be buying your phone. Why? Because you increase it too much. But on the other hand, if you increase it like this, 1,000, 1,100, 1,200, 1,300, people wouldn't feel it, right? So that jump from 1,000 to 2,000, that gap in price, that's why it's called fair value gap. That imbalance, it leaves an imbalance in the market. Okay? So it leaves an imbalance in the market. Now you're like, okay, but Omar, how do we see this on the charts? Chill out, bro. Chill out. I like to always give you guys background just so... Oh shit, maybe you're not seeing this properly. I like to give you guys background so you understand what's going on. Because I don't want you just... I'm not a teacher at the end of the day. I'm not here to tell you, yo, you gotta do this and that's it. And yeah, now you follow the rules. No, I could do that. I mean, to be honest, if I did that, this video would probably be done already. And I could be doing whatever I want. But I like to explain stuff, why they happen, before actually explaining how you can use them. So this is when the price was 1,000, and here it's like when it jumped to 2,000. Now, price always has to come back to that gap you left. So when you jump from 1,000 to 2,000, people stop buying. What would you do in this case, bro? Logically, you would lower the price again, right? Because we jumped from 1,000 to 2,000. At 2,000, you realize, oh shit, people are not buying my shit. What do I do now? Now you be like, you know what? I'm not gonna drop the price back to 1,000. I'm gonna drop it to 1,500, for example. And that's when price comes back. When price comes back to 1,500, what's the most logical thing to happen? Price rejects from there, right? Because once we come back to 1,500, people are gonna start buying again. And now you can increase your price again and again slowly. So, in trading terms, let's say this was the 1,000, and you directly here jump to 2,000, right? Here we left a gap. Boom. This gap right here, the imbalance, it has a really strong magnet. It attracts the price. So price has to come back there and test it. So what does the price do here? Although this is a no-wick candle and price is supposed to reject from it, because that's, I haven't explained it yet. But usually that's what happens. So price is gonna reject from this no-wick candle. But because there's an imbalance here, price might come back, touch the imbalance first, and then reject from it. Okay? So this is a very important concept. Price might come down, tap the imbalance, and then reject. So that's why it's very important that if you see an imbalance, you don't put, if your stop loss is not below the imbalance. So if my stop loss is here, it's all right. I don't care. I can enter buys here. Why? Because although I know that price is going to come and tap here and then reject, I'm still safe because now we have the no wick protecting me. I also have the imbalance with me. On the other hand, if my stop loss, let's say, was here, I would be scared. Why? Because I would be scared that what if price is going to come, let's say my stop loss is somewhere here. I would be scared because what if the price is going to come tap the imbalance, which is going to stop me out, and then it's going to reject. Cool? So that's it pretty much. You know the imbalance like this. So it's a 3 candles pattern. Let's say you have this candle here, another candle, another candle. You have to see, it also includes the wicks, by the way. So when the price leaves this gap in between, that's what the imbalance is. So if this wick was like this, would you say this is an imbalance? No. Why? Because the wick of the previous candle and the wick of this current candle, they connect, they cover it. You see, so it's not an imbalance anymore. So that's something you also gotta know. And like this, for example, it's also not an imbalance. Why? Because this wick and this wick, they cover the price. So price increased, came down, increased again, came down, increased again, came down, and then decided to keep pushing. Okay? Same concept for the bearish example. Let me show it here, and then I'm gonna show you a quick example on the charts. Oops. Red candle. Boom. One. Another one. Another one. Another one. Should have drawn these before. Actually, I should have drawn these before explaining, so I would have saved you all some time. You know what? Just skip this part. Like, just, make it faster until I finish them. If you want to. I don't know. If you're enjoying me struggling to draw normal candles, feel free to be my guest. All right, we're done. Perfect. So, you see right here, would be the imbalance, right? Boom. That's it. So this would be the imbalance. So if we have a no wick candle here, I'm supposed to enter sells. If my stop loss is somewhere around here, I would be scared. Why? Because I would be scared we're gonna tap the imbalance and then reject from there. Now, don't make it as a hard rule, because what if there is an imbalance all the way like 2 weeks ago? Are we gonna still lock in about it? No. Because once we really form a structure, you can cancel out the imbalance. Because let's say it's like this, right? And then a no wick candle shows up here, and the imbalance is somewhere right here. I don't care because, bro, honestly, if price want to go all the way up there, I don't care. Like, because we're not gonna end up not trading forever. You know what I mean? So let me show you what an imbalance is, and I'm gonna explain to you. Now, this, for example, this is a fair value gap, or this is a good imbalance. Oh my god, this is a perfect imbalance. You see? Oh, perfect. Perfect. So here we're in a clear uptrend. This is a bit advanced, guys, but it's okay. If you're a beginner, bear with me, okay? So this is like I'm gonna re-explain this later in the video. So you see here, this is the candle. You see how we have a wick? We have a wick. So this is the imbalance right here. Boom, this part. You see? Now, why do I not really care about it? Would I take the buys here? Definitely. Why? Because my stop loss would have to be below the imbalance, so it doesn't really scare me. Okay? If you don't get this part yet, it's okay. I'm going to re-explain it later in the video, so don't worry. But I want to make this clear. You see, like, that's why this imbalance doesn't scare me. Now you're gonna be like, yo, Omar, but we got an imbalance here. What about this imbalance right here? Doesn't this scare you? Like, why would you enter buys if there's an imbalance here? I'll tell you, yo, bro, listen, young kid. Yo, why am I saying young kid? You might be older than me. No. You're not a young kid. I apologize for this. I actually sincerely apologize. With kind regards, Omar Nowick. Damn. So you see here, for example, this one, I wouldn't be scared about. Why? Because we already have a lot of structure in between. Like, we already have a structure in between. We're forming higher highs and higher lows and all of that. You know what I mean? That's why this wouldn't really scare me. I mean, this is not a... You get what I mean, though. I'm not talking about the trend. I'm just... So this wouldn't really scare me. Why? Because I know, okay, price might go and tap it and reject from it, but I got one here already protecting me, you know what I mean? And it's too old, so I don't think price would go back there and tap it. But if it does, it does. But I can't like just keep thinking about imbalances, because what if we have an imbalance from, I don't know, like we have an imbalance here. Would I still take it in consideration? No. Okay, so it's just like, I'm telling you this as a confluence, so don't start overthinking this. Oh my god, what? Whoa, this is mad, guys. Okay, so I drew this imbalance right here, and look what happened, to confirm my theory, actually. Price came down, tapped it, and rejected. Crazy. All right. Crazy work. Damn. Actually, damn. Like, damn. Alright, but you get the point. Use it as more of as a confluence. Don't use it as a rule. Okay? So use it more as a confluence, not as a rule. Now, I also like to do this thing. So, I liked, instead of using them to stop me from taking trades, like, it's still important as a rule. Like, you gotta know how to read this. I'm not making it as a rule for one reason. I want it to be as mechanical as I can. So if we make this as a rule, you guys are gonna start, doubting yourself before taking trades. That's why I don't want to do that. And then someone will, let me stay silent. So the way I like to use these imbalances, let's say there was an imbalance here, somewhere around here. Boom, okay? Let's say there's an imbalance here. Now, the way I would like to see them is like this. Okay, if I enter buys here, I know that the price has to go and tap the imbalance, right? So I would be like, okay, cool. Where's my take profit? It's here. All right, cool. Now I have an extra confluence that price will push up. Why? Because I know it's going to push up in order to tap the imbalance. So that's why I would be like, okay, extra, maybe if I could risk a bit more, maybe I could, I don't know. This is a bit advanced, but like extend my TP a bit and so on. So just a concept that I wanted you to teach you. And yeah, like if we're gonna take buys and the imbalance is above us, that's perfect, because we know, okay, price is gonna go up. So just let's say call it a concept that's nice to know. Like, it's nice to know this concept, all right? Let's see another example. If I could find one. I mean, I should be able to find one. Yeah, this one, for example. Yeah, here, for example, let's say I was gonna take sells here, and I see, okay, we have a huge imbalance here. Now I know, okay, that's a good sign. Why? Because if I take sells here, my stop loss has to be all the way up here. But we also got this imbalance with us. So we use it as a guard, like it's as if it's protecting us now. You see? So this is like it's extra confluence. Now we know, okay, we have a higher chance of this working out. Of course, I wouldn't take this just an example, or maybe I would actually. I don't know. Like, I'm not gonna go and analyze this in details now. Or maybe I did. I swear, like, I don't remember, but just like, okay, let me focus. Oof. The ADHD kicked in. I start talking about thinking about this, if this is a good trade or not. I don't know why. But you see what I mean? Like, stop loss would have to be here. And then I would say, okay, this imbalance would be good. Why? Because once we tap it, price gonna reject from there. So just like I know here, I'm more confident taking this trade than how I would be. Or let's say if there's something iffy about it, I'm like, yeah, I'm not sure if I want to take it or not. It has a bit. Let's say this one, it has a big stop loss. I don't know if I don't know if I want to take this or not. But then I'll be like, oh, but we got an imbalance with us. That's extra confluence. Okay, let me take sells here. Okay, starting to catch up how I use the imbalances. And yeah, this one was a loss I took a couple of days ago, but it's alright. I posted it on my YouTube as well. Right? Did I post it? Yeah, I did. I did. Wait, I gotta actually double check this. But I'm pretty sure I did. Let's see. I swear I got ADHD. I'm just starting. When was the date? 30 Jan. Oh, I did. I was about to say, when did I? Yeah, I did. And it's in the weekly recap video. I did post it. Oh my god, I got scared because I don't remember making a whole video about this. You know what I mean? Like in-depth video about it. But it's in the, you know, the weekly. I made a video once, 4 wins, 1 loss. I was like, yo, where? I remember recording about. I don't remember where. Anyway, that's not the point. Yeah. So that's all you need to know about imbalances. Just use them as a confluence. Don't make them the whole strategy, all right? They're important. Yes, they're important. They're a double sword edge. They could protect you from hitting stop loss. Yes. They could attract the price to go up. Let's say if you're in buys, they could attract the price to go up to the imbalance. Yes. But they also could attract the price to hit your stop loss and then tap it and then dip. All right? So it's just, I wanted to let you know about this. This is how when I'm looking at the price, if I'm gonna take buys or sells, sometimes I do take them into consideration. It's a very strong concept, so that's why I felt like I had to let you all know about it. Okay? Now, that's it pretty much. Now, that's all you need to know about imbalances. Now, best pairs to trade. Okay, so first thing, let's start with the Forex. Forex pairs. You got, you know what, I'm gonna make it properly in case you want to take a screenshot of this. No wick candle can be traded on. First thing first, Forex pairs. This is absolutely my favorite. Like, this is my favorite by far. Like, by far. Like, this is what made the strategy really good. Okay? So, Forex pairs, best pair to trade is USD JPY. After that, GBP USD. Some people prefer, like, from what I've seen from my students, some of them, and most of them actually, I don't know why, they prefer GBP USD over USD JPY. I think it's because USD JPY has bigger stop loss and it takes longer time to take profit. But I mean, It's up to them. So USD JPY is the best pair. GBP USD is the second best pair. AUD USD is the third best pair. And that's the best three pairs to trade the NOIC strategy. So the NOIC strategy can be traded on in Forex pairs. The best pairs are USD JPY, GBP USD, and AUD USD. As I said earlier, just make sure when you're checking out which, like here on these pairs, which one you're gonna choose. Like let's say you decide I'm gonna trade USD JPY. Make sure it's Oanda, not something else. All right, just a quick reminder. I think I'm gonna write it down. Okay. Second best thing is gold. XAU USD, if you want to call it. XAU USD. Now, these are basically what I traded on. I traded on Forex pairs, USD JPY, GBP USD, AUD USD, and then I traded on gold as well. Now, before we continue, because if you're a futures trader or if you're crypto or if you're stocks, bear with me, okay? So, or you know what? Let's keep it like this for now. I'm gonna say it instead. So take screenshot of this for the Forex traders. So I don't look, so I look good when you're taking a screenshot. For futures traders, I have students who, I want to be completely transparent with everyone, okay? I have students who have been very extremely profitable with this strategy, trading it on futures. I had students who've been profitable trading on crypto. Before you hit me up with what on crypto, Bitcoin or meme coins or blah, 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 I'm not going to give a straight answer, and I'm going to tell you why. I had people trading it on stocks. I even had people trading on silver in Forex, like as commodity. Now, for the futures traders, I'm not super educated in the future industry yet. So I don't want to tell you something that's wrong or that I'm not sure about. You know what I mean? Like when I talk to my students about it and I see like they've been getting funded, they've been getting payouts, and they're profitable. And they're doing it through futures because it has lower commission, lower spreads, the funded accounts are cheaper. Like me personally, I'm even taking into consideration switching from Forex to futures, imagine. But at the moment, I don't have enough knowledge about it, so that's why I don't want to give you something wrong, okay? Now, is it possible to trade on futures? Absolutely. Is it possible to trade on stocks? Absolutely. Is it possible to trade on crypto? Absolutely. One of my students trades it on Bitcoin. I can tell you this much. Is it good? Like, I know what was his name. He's not my student, but he was in Discord, my Discord channel. So he used to trade it on NASDAQ, NAS 100. It works also on US 30. But me personally, do I trade it on these pairs, like on crypto and stocks and all of that? No. Now, when I used to back in the days invest in meme coins, I would be a bit careful with meme coins. But let's say Bitcoin. Bitcoin, actually, I'm surprised why I haven't started it yet, like trading the strategy on Bitcoin. Because look, it's been working amazing, actually. Like, it's been working beautiful, like actually beautiful. Like, I'm not gonna lie to you. Better than Forex at this point. Like 1, 2, 3, 4, 5. Okay, this would have been a loss. 6. So 6 wins and 1 loss. 7, if you count all of those. 8. Like, this is just me randomly picking, And like, there was no other good NOICs. Like, before you tell me, yeah, but these ones were against the trend, which I'm gonna explain later. So it does work on crypto. It does work on futures. I just don't want to tell you how exactly before me knowing exactly what it is. I could maybe do a future video about it. And yeah, like soon I'm gonna have some people in my Discord who are gonna be managing the crypto and the futures. So this way, like, everyone is expert in one part. Like, I want to be the Forex expert, someone's gonna be the futures expert, and someone's gonna be the crypto expert. So that way it's like I don't have to do everything. But yeah, that's it pretty much. So if you're, I know that's not the answer you wanted to hear. If you're a crypto trader, if you're a future trader, I'm sorry. But you could, like, I would still recommend you to watch the video until the end. You could maybe learn the strategy and then you try to backtest it yourself. You know what I mean? Try backtesting it yourself, see on what doesn't work, and then come hit me up. Tell me, oh, I realized this and that. I might jump on a call with you. You know, if I see this, okay, it's real, like how you're saying, we could do a backtest session together, and you know, maybe we make a new video and we post it like, yo, okay, after testing it for 1-2 years worth of data, not 1-2 years in real life, we realize this has this much win rate. It depends on how much win rate it has, and you know, like we just see how it is, and we journal it and everything. All right. So don't give up, and I'm here to help you. By the way, when I explain the strategy, whatever you're trading, if you're trading forex, futures, crypto, stocks, whatever it is, it's the same exact concept. It's the same exact concept. Same way you put stop loss, same way you take profit. If you're trading crypto spots, same concept, because you're gonna buy or sell. Although I know you're not gonna have a TP or stop loss, but still same concept. It's gonna tell you how the market's gonna move. So you could think about the Nowick strategy as an entry model instead of more of a strategy. You know what I mean? So it's a very good thing to have, like extremely good thing to have. Yeah, that's it pretty much. What else should I say? But I'm excited. I'm excited. I want to have a couple of good future traders, a couple of crypto traders I can work with. This way we could expand even better. I have to do this. Especially when I'm seeing my students getting payouts and they're trading futures. Like, imagine someone hit me up like, yo, is this a valid trade or not? I'm like, okay, which lot size did you calculate? And then they're like, huh? Lot size? What you mean? We use micros, minis, macros. I don't even know what they called. Anyway, I got too distracted again. So that's for the pairs. So now I explained the imbalance, best pairs to trade, the knowing strategy, trading sessions, when to trade and when not to. All right. Whew. Trading sessions, guys. You guys, I don't know why you've been asking me this question so long. And I always say the same answer, but you guys you just like to make my life difficult. All right. Trading sessions. Okay. So, when does the Nowick strategy work the best, guys? That's your question, right? You tell me, yo, Omar, I don't want to sit in front of the charts the whole day, so just tell me which one is the best session, and I'm gonna trade it. I'm gonna tell you, yo, chill out, bro. Okay, chill out. Me personally, first thing about the Nowick strategy, it works in all sessions. Actually, let me explain this to maybe we have beginners. So, you know, especially like in Forex and all this, you have sessions where banks open. So you have a London session, you have a New York session, and you have Asia session. Some people call it Tokyo. And these sessions basically, let's say, I don't know, a New York session opens from 9:30 a.m. to whatever time it is. And then London opens from this time to this time, and then New York opens from this time to this time. Now, this is how it works. I don't really care too much details about this because you could search it up on, I think it's called Baby Pips time converter. And then you can see them, yeah, Baby Pips time converter. You can see what time each session opens and closes according to your time. All right? So that's something you could go search up yourself, because I can't make a video about this because it's very different from country to country, from city, you know what I mean, from time zone to time zone. So, Nowick strategy works in all sessions. Cool. The Nowick strategy works in all sessions. In all sessions. It's up to you which one you want to choose. Me personally, you can be like, okay, but Omar, which session do you trade? I don't have a fixed session. Maybe today I want to wake up early and I don't have anything to do. I jump and I start trading. I put, let's say, 2 3 hours and then start training. But tomorrow I'm gonna go in the morning to the gym. Then I'm not gonna trade. I'm gonna trade in the afternoon. But the day after, in the morning I'm gonna be going to the gym, and at night I'm gonna be eating dinner with my friend. Then at lunchtime, or like in the afternoon, evening, I'm gonna be trading. You know what I mean? That's why I don't have a fixed time to trade. That's first thing. Second thing. Second thing. And by the way, there's one more important point about it's not really all sessions. I'm gonna talk about it. Second thing, I don't really sit in front of the charts anymore and trade like how I used to. Like back in the days, I used to sit 4 or 5 hours in front of the charts and wait for each setup to pull up, to show up, and then I can take a trade. I realized something. This is not for me, to be honest, to do, because when I start itching when I'm looking for trades, like if I don't see a trade for a couple of hours, I start itching and I just want to take a trade, and then I would end up taking bad trades. So now what I do is have an alert on my phone, which I'm gonna be explaining later in this video how to set up the alerts. Basically, what happens is I get an alert notification from TradingView itself. Yo, Omar, boom. A no candle showed up, and then I decide, okay, am I gonna take this trade or not? If it's a yes, then I sit down properly on the laptop and I start, like, start analyzing and doing all of that stuff. If not, like, I just look at it on the phone. If it's not a good trade, like I can see it. Let's say we're in an uptrend and I see a bearish no candle, I just directly skip it. So that's why I stopped really sitting in front of the charts. Like I don't do that no more. So I hope that answers your question. And it works in all sessions except for early Asia. Now, what do I mean by that? And is it is it terrible in early Asia, or what do I mean by that? Well, first thing, let's define early Asia. Early Asia is basically when the market opens, first couple of hours of Asia session. I like to say first 3 hours. Okay? Usually I break these rules often, but I try not to. Like now I'm in Asia, that's why I break it. So first 3 hours of Asia session, or like this spreads hour between New York session and Asia session, the market is not really good to be traded in general, regardless what you're trading, because the volume is low, you get some random spikes here and there. Price is very unpredictable then. So just to avoid this, I prefer to avoid early Asia. Now, do I avoid it always? Not really. Sometimes I do hold through early Asia, and like I'm being completely transparent. Just know that if you're trading early Asia, your win rate might slightly drop, all right? And also, same concept with late New York. Like at the end of New York session, also the volume is low, the random spikes start happening. Just to avoid these, try to avoid these times, okay? Do I still do it? I still do it from time to time. But then I need to see a setup to trade. Like let's say it's an early Asia, I'm looking for A setups only. If I still want to trade. Like I don't want to take a 70% win rate setup. No, I will be looking for the 90% win rate setup. Because in my head it works like this. If I'm looking for a 90% win rate setup, but it's early Asia, it's gonna drop from 90 to 80. I'm alright with that. But if I'm trading a 70% win rate setup, and then it's early Asia, it's gonna drop from 70 to 60. That's terrible. Like basically, in the long run, that's not even profitable, or barely profitable. So to avoid that, now you know how I trade, which sessions. I'm gonna sum it up quickly. First thing you can do, first thing first, you can trade this strategy in all sessions. I personally don't stay in front of the chart for a certain session. I just let it be. When I get an alert, I trade, or I don't trade, depends if it's a good trade or not. If you still want to, because look, this is not easy to do, by the way, because this sometimes can be mentally draining. Just because sometimes you might be sitting with your family and then you get a notification and you haven't traded that day. Trust me, it's tough because I know you're gonna start going and checking the charts and all of that. If that's you and it's gonna end up even ruining your psychology, don't do that. If you feel like, okay, regardless, let's call you, what should I call you guys? Let's say your name is Sam. If Sam feels like, okay, every time I'm gonna get an alert, I'm gonna be jumping on a trade regardless what I'm doing, and because he's gonna be itching, put a certain time where you wanna trade. Put, let's say, 2 hours, 3 hours, 4 hours, what, it's up to you. Put certain times to trade and say, okay, I'm gonna trade from this time to this time. Now, if that's the case, I can drop some, some secret sauce. Usually I'm not supposed to drop this type of sauce, but I'm gonna do it for y'all. Best session to trade, the highest win rate session is London session. Okay? Best session to trade is London. And after that, it's Asia. And after that, it's New York. I would say Asia and New York, they're pretty similar. I've checked my journal before. They're pretty similar. It really depends on the pair, because some pair performs better in certain sessions, some pair performs better in another session. I have the data, I have the statistics, I have the back tests of all of this, but I don't want to tell it to you guys, because if I do, I feel like I'm gonna just make your life more complicated. Like, it's gonna make you overthink everything. Like, I don't want to tell you, yeah, let's say USDJPY performs the best during New York, for instance, or during Asia. Because if I tell you every single one, you're gonna start overthinking and you're gonna start doubting it. I don't want to do that to you. I'm gonna let you be peace. I'm gonna give you peace of mind. So all you need to know is London is London is the best for all pairs. And then Asia and then New York, just make sure you're not trading first. Like, this after the spreads hours and then the opening of Asia, and let it be like 2 hours after the opening. So I would say first 3 hours after, the spreads hour. These 3 hours try to avoid. Like, once you see, okay, Asia open, 1 to 2 hours after that, don't take trades. That's my advice. It's up to you if you want to follow it or not. All right? And yeah, I don't like to make these strict, because like, probably now, people watching this video, there's people from India, there's people from US, there's people from the Middle East, there's people from Europe, there's people from South America. So it really depends on y'all, like, which session you want to choose. I just had to give you the best session, which is London. I kept a bucket. When I was in Sweden, in Europe, I used to trade London, and it was amazing. I used to wake up every single day in the morning. Beautiful. In Asia, same concept. But imagine I live in the US. London session would be, I don't know, 2, 3 a.m. I'm not going to be trading that, right? So yeah, talking about 2, 3 a.m. Whoa, it's 4 a.m. here. God damn. And I'm recording this video. I got to fix my sleep schedule for real. It's getting serious, guys. But anyway, that's it pretty much. I don't want to yap too much about this because it's not that important. I yap too much about it because you guys, I don't know why you've been asking about this for too long. Every single day I see at least 2, 3 comments about it. I see at least 5 DMs. And I'm like, yo, bro, just trade any session. And then when I tell you guys, trade any session, y'all ask me, but which one is the best? And then I tell you London. Oh, but what's after London? I'm like, bro, so I decided, let me put in this video. And just so people stop asking me this goddamn question. All right, let's see what else do we have on the list. News and risk management. All right. News and risk management. Well, I hope this is clear. And if I see someone commenting on this video asking me about sessions, I'm gonna go furious, man. No, I'm joking. If you have a question, ask, of course. So news and risk management. All right. So now we're going to move to the how do Omar trade news? And after that, we're going to do how does Omar control his risks? So, news. News. The most dangerous thing on earth. On earth. That's an exaggeration. So, for news, first thing first, maybe I should record it on Forex Factory. You know what? I believe in y'all. I believe that my audience is smart, and I don't need to go on the website and show them what's going on for them to understand, right? I believe in y'all. If I write it down here, you're gonna understand. Okay, I hope so. So first thing first, to check news, you have to search up forexfactory.com. Okay, so you just go right, tap down forexfactory.com if you're a beginner. If you're not a beginner, you already know this. You better. This is not a must, by the way. It doesn't have to be forexfactory.com. You can use whichever website you want to check news. I personally check forexfactory.com. It's one of the biggest, so yeah. So what happens in news? When you go on Forex Factory, there's 4 types of news. There's red folders, orange folders, yellow folders, and gray folders. Red means dangerous. Yellow, orange means mid. Yellow means it's not that dangerous. And gray, usually gray is for bank holidays, so it's not as important. Bank holidays, so sometimes it's dangerous, sometimes it's not. Me personally, I don't really care about the gray. All right. So the most important one, which is red folders. When you go now on Forex Factory, you're gonna see red, orange, yellow. You're gonna see the news, and you can choose which currencies to see the news for. I have the USD, the JPY, the GBP, the AUD, and the Euro. Okay, and I'm gonna tell you why I have the Euro. Now, a red folder usually means once the news comes, it's gonna do a high impact. Like, we're getting cooked, guys. Like, price might push up too much, price might push down too much. And of course, it's different from pair to pair. It might be different from pair to pair, from news to news. So a red folder, let's say on CPI, is gonna be crazy. It's gonna ruin the market for this day. A red folder on, PMI is gonna be, usually is also strong, but it's not as strong as CPI. Like, you're not gonna see candles moving crazy, you know what I mean? So yeah. Now that's for the beginners. I'm sorry if you're advanced. I know you know this, but what can I do, man? So that's how news work. That's how red, orange, yellow, gray folder. Yeah, that's how these folders work. Orange usually is medium. It's not as important. It's not as strong. Yellow means it's weak. I don't even have them in my filter. Like, I don't look at yellow. If they want to surprise me, sometimes it happens. Yellow folders come and blast the market, but it's still manageable. And then gray, I don't really care about them. They just slow down the market and they're annoying. Now, that's for the beginners. Now, for the advanced people, let me tell you how I treat news. When I see a red folder, I don't take trades. I don't take trades 1 hour before the news. What do I mean by that? I don't enter trades, I don't enter trades. It's very important. It's very different. I don't enter new trades 1 hour before news. So 1 hour before the red folder, I stop taking trades. Now, this, sometimes I break this rule, but like, I try to avoid it. Is, let's say you have a super small stop loss. It's gonna be, let's say on USD JPY, you have a 10 pip stop loss. You know, in this, until 1 hour of the news, we're most probably gonna take profit or stop loss, right? But yeah, that's it pretty much. So like, I know, because now I reach a point where I'm an advanced trader, I know how to assess if I'm gonna hit stop loss or take profit in time or not. But if you're still new, until you really learn this stuff, 1 hour before the red folder news, you're not allowed to take any trades. Okay? I hope you guys taking down notes, because you're not gonna remember all of this if you don't. So 1 hour before the red folder, no news, and no taking new trades. Now you're gonna be like, okay, Omar, but let's say 3 hours before the news, I took a trade. Like, okay, and now it's 1 hour before the news. Do I close? Nope. What about 30 minutes before the news? Do I close? Nope. What about 15 minutes? Yes. So if you're already in a trade, you should close the trade 15 minutes. Close the trade 15 minutes before the news. Sounds good? Sounds good. So I don't enter new trades 1 hour before news. I close the trade 15 minutes before the news. I take new trades 15 minutes after news. And by the way, this is acceptable by most of prop firms. Most of prop firms tell you if you want to trade funded account, most of them they tell you 2 minutes before, 2 minutes after you're not allowed to trade. Some of them tell you 5 minutes, 5 minutes. Either ways, I don't trade for 15 minutes, 15 minutes. So if I see a red folder and there's 1 hour until news, and then we have a no wick candle showing up now, I'm not taking that trade no more. If let's say I took a trade 2 hours ago and unfortunately we're still in that trade, if I'm in profit, if I'm in drawdown, if I'm on break even, 15 minutes before the news, I'm closing the trade. And when can I trade again? 15 minutes after the news. Now, I want you to be able to assess this also by yourself. Like, you gotta be, logical. If you're still seeing the prices moving crazy, try to avoid that. If you're seeing the price being choppy, try to avoid that. You know what I mean? Like, you should have an eye as well. Like, there is stuff you can't just teach. But I'm giving you the rules that I have. I sometimes rarely break them, not because I'm an emotional trader. I break them because I know, this is gonna have high impact. Let's say we're gonna hit the take profit here or stop loss in 10, 15 minutes. I can assess this. But until you reach that level, I would highly recommend you just follow these rules right here and you should be good to go. So don't enter new trades 1 hour before news. Close the trade 15 minutes before the news, and take new trades only 15 minutes after news. So after 5 minutes, don't trade new trades. No, after news, wait. Now, I'm not gonna go in depth into orange, yellow, and gray. Just gray for me, it doesn't matter. I can still trade them. Most of the time, you're not even gonna get good setups because price is gonna be choppy. It's gonna be consolidating. Let's say US bank holiday. There's no volume, so gray days, either ways, you're not gonna get provided with news. Yellow folders are sometimes gonna surprise you. Sometimes, most of the time, they have zero impact, but sometimes they're just gonna have impact for no reason and just gotta live with it. An orange folder, you gotta be a bit more careful with it. Sometimes, let's say if I'm halfway to TP, to my take profit, I'm in really good profit. Sometimes I do close the trade, or at least I move stop loss to break even, and then I check, are we gonna have impact or not? If I don't see any impact, then we're good to go. Then we can, remove the stop loss to break even, and then put the stop loss back where it was and take profit, like everything back to normal. All right. Now this is advanced. If you're not gonna understand it, it's okay because you're still not familiar with news. Like if you don't understand what I'm gonna say now, just keep going with the video. You don't need to rewatch it, and one day you're gonna understand it by yourself. So, first thing first, for news. USD news affects everything. Cool? USD news affects everything. It affects GBP USD, USD JPY, AUD USD, gold. It affects everything. GBP news affects GBP and JPY news affects JPY, and then Euro news affects Euro and GBP. We don't trade Euro, but I'm just gonna let you know. So the new USD red folders, guys, this one is the most dangerous one because it's gonna change everything. Like every single pair is gonna get affected by it. GBP, if I see a red folder on GBP, I might be okay, and most of the time I do this, I might still be okay taking, I don't know, a trade on GBP, on USD JPY, for example, or AUDUSD, or on gold. It's alright with me. Now, JPY on the other hand, same thing. It only affects USD JPY. So in this case, I would like to avoid trading USD JPY. But I could still trade AUDUSD, I could still trade GBP USD. Now, this is going to be the only weird part. Euro. I always have Euro, although as you can see, I don't have any Euro pairs. But Euro is important to have in your Forex factory. Why? Because Euro news affects Euro, which we don't care about, but it also affects GBP directly. So when Euro news comes, they affect the Euro and they also affect GBP. Now, don't take it as a rule like, okay, this is always going to happen. Sometimes you might be disappointed and it's not going to happen. But from experience and from what I've seen, Euro does have high impact on GBP. So a red folder on Euro means you're not allowed to trade Euro, and means you're not allowed to trade GBP as well. A red folder on USD means you're not allowed to trade anything. A red folder on GBP means you're not allowed to trade GBP. And red folder on JPY means you're not allowed to trade JPY. When I say you're not allowed to, I mean we use these rules. Okay? So let's do a quick quiz to you. If we have a GBP news in 1 hour, are we allowed to take trades on USD JPY? Yes, we are. Why? Because it's GBP news. Why can't we trade USD JPY? Okay, another one. If we have a JPY news, are we allowed to trade USD JPY? No, we're not. Why? Because we have JPY news, so we're not allowed to trade USD JPY. Let's say we have USD news. Are we allowed to trade anything? No, we're not. All right. If we have Euro news, are we allowed to trade USD JPY? Yes, we are, because they're not related. If we have Euro news, are we allowed to trade GBP USD? This is the only exception. No, you're not. So it's very easy. It's very simple. Just look, USD, everything. You're not allowed to trade. Let me write them down. USD, not allowed to trade anything. GBP, not allowed to trade. GBP pairs. JPY, not allowed to trade. JPY pairs. Euro, not allowed to trade. GBP and Euro pairs. You could take a screenshot of this. Alright, sounds good. Write it down, take notes. And yeah, that's it pretty much. There was one thing actually I wanted to talk about as well earlier. I just remembered it now. Let me see if I can find it though. Yeah, I can't find it. I want to rewrite everything. All right, it's okay. Now, for the new beginners, and actually no, let's have some risk management control. You know, like I know, guys, I'm yapping too much, but trust me. You see everything I'm teaching you right now? I can promise you this. This is way more important than the strategy. Like, I know you guys now itching and you're like, yo, Omar, please stop yapping and just drop down to this strategy. Like, I just want to know the strategy. And I know all of this. I just want to trade, you know? If you still have that mindset, bro, you need help, man. You need help, like in trading, because you're not going to be able to make in trading as long as you have that mindset. Like, you're like, yo, Omar, what do you mean, bro? Bro, listen. Whatever strategy you have, if you can't follow these rules, you're never going to become profitable. And that's the hard truth. Like, I know that's not something you want to hear, but you got to hear it. And I'm being honest with you. Even me, when I was trading the no-wick strategy, before I actually understood these rules, I wasn't profitable. Like, that's the truth. If you want to trade a funded account, you're never going to pass your funded if you don't really understand what news are. If you don't really understand the impact of them, how to trade them, what to do when you see news. because these are more important than the strategy itself. Look, I'm not saying the no strategy is the only profitable strategy out there. There is hundreds of profitable strategies. There is. But there's one thing common about all of them: news and risk management and psychology and emotion. Now, does the no strategy require less emotions and psychology than the other strategies? Of course, I would say that. That's why I love this strategy. But whatever strategy you get, if regardless, if it's the no strategy, if it's ICT, if it's SMC, if it's SK, if it's whatever it is, if you don't actually follow these rules, you're not gonna be profitable. Even if you combine them all together, you're not gonna be profitable. All right. So if you're searching for the hidden gem, this is the hidden gem. It's not the strategy that I'm gonna explain in like 5-10 minutes later. It's this. Okay? Now, I just want to emphasize one thing. Please don't trade news, guys. I swear, I've been denied. The reason why I'm telling you don't trade news is this. You could be in something like this, all right? Let's say you're in a position like this. You're in profit. And then news comes now, all right? Boom. Now, usually, price would move slowly, right? Like that's how a normal price action moves. And then it will hit your stop loss and you get stopped out and it's okay. You get your loss, and let's say you were supposed to lose minus, let's say, I don't know, 1K. Minus 1K dollars. Here you're supposed, let's say, to lose 1K dollars. That's how a normal price action would happen, or it would be something like this, something like this, something like this, and then you end up losing 1K. Okay? That's how normal price action happens. Now, when news happens, and instead of this price moving slowly down, it would just go like this. I'm talking about the red folders, of course, not the yellow folders. Now, when this happens, I don't know about futures. Futures, they might be better than Forex in this, but I'm talking specifically about Forex. In this case, you can't control how much you lose. Why? Because your broker is not going to read your stop loss. Some of the brokers. Some of them do, but most of them don't. So instead of you losing here minus 1K, you might lose minus 3K. You might lose 4K. You might lose 2K. You might lose 1K. Sometimes you might lose only 1K. And sometimes you might lose your whole account. Then you go like, yo, Omar, but I have a stop loss. That's it, bro. The market doesn't care. And it's unfortunate. And by the way, it's the same for the take profit. If it ends up hitting your take profit, you're also going to win way more than you should. But you need only one mistake, and the market punishes you a lot for it. You get stopped out and you lose way more than you should. And that's coming back from that is not easy, because now it has a scar in you. I've made good, decent amount of money in my life trading. But until today, I remember when Jerome Powell talked and I blew my funded account. So until today, I remember it. Imagine. And that funded costed me, I don't remember how much. It's not about the money of it. It's just about, it hurt my feelings so much that I actually can't forget the pain of it. You know what I mean? Now look, in theory, it's something, and in practice, it's something. Now I'm explaining this to you, and you're like, okay, yeah, I'm a disciplined trader. I have a good psychology. I'm a good trader. I'm not gonna trade news. I'm gonna be disciplined. All of this, all of that. Well, the truth is, you gotta burn your fingers first, because I know you're gonna say this, and one day you're gonna be, let's say you're gonna be in drawdown, and then news are gonna come, and you're gonna like, yeah, Omar said 15 minutes. Let it be 10 minutes. Let it be 5 minutes. Yeah, price is gonna push up. Let me just be at break even. A couple more pips and I'm gonna close at break even. And then the next candle is gonna come and I'm like, poosh, and you're just gonna be like, damn, I should have listened to Omar. But if you don't go through that feeling yourself, I'm not gonna be able to help you, you know? Like, I hope you're smart enough. I genuinely mean this, by the way. I hope what did we call the audience? Sam. I hope, Sam, that you're smart enough to actually see through this and learn from my mistakes. Instead of you losing the way I was losing, I hope you learn the mistake and try to avoid this. Now you're gonna see in the comments, guys, in the comments, please let me know how many times did you blow your account because of news. Be honest, right? So like just for the new traders to learn, if you could actually help me with this, delivering this message to them, please write a comment about why it's important that they avoid news. You know what I mean? Anyway, so that's it pretty much. And I was gonna say one more thing about the pairs. So for the ones who trade Forex, you already know now we trade USD JPY, we trade GBP USD, we trade AUD USD, we trade gold. Gold has the lowest win rate between all of them, unfortunate. I try to avoid it as much as I can. For AUD USD, it's better. For GBP USD, it's better. And then for USD JPY, it's perfect. Now, one thing I want to add about the pairs, about the Forex pairs specifically. Please, 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 please don't try and start searching for new pairs every single day. Because that used to be me. I've backtested, I don't want to exaggerate and say hundreds, but I lost count. Like, I've lost count of how many pairs I backtested. Some of them are profitable, okay? Some pairs, you're gonna find some profitable pairs. There is a really good pair actually, USD CAD. USD, American dollar, Canadian dollar. I have one of my students, he's been trading this. It's working amazing for him. Now you'll be like, yo, Omar, why haven't you added it yet? I haven't backtested it myself yet, so I can't do it, unfortunately. Hey, I know he's gonna be watching this video. Shout out to you. But what is it called? Yeah, until I do so, I'm not gonna add it to the list. But please don't, like, master these ones, okay? Master these pairs, and after you do so, text me on IG and be like, yo, I found out that the strategy is profitable on this pair and this pair, and then I can take it into consideration, all right? Two pairs I would actually highly recommend that you to stay away from, and although they're very famous and they're one of the best, is Euro USD. So try to avoid Euro USD. Not you only Euro USD, all Euro pairs. I had some people, not my students, because my students are not allowed to trade Euro, but I had some people on IG, they text me, yo, I've been achieving amazing results trading Euro. Personally, I've backtested it, I haven't had good results with Euro, so I would highly recommend any Euro pair, stay away from it. Regardless if it's Euro USD, Euro JPY, whatever. I don't know why, it's not as efficient on Euro pairs as how it's on the other pairs. And one pair you should definitely, like this one, don't even try. I backtested it myself and it's negative. Like it's not even, imagine with the 1-to-1 RR, it has a negative win rate. That's how bad this pair is, which is GBP, JPY, GJ. So GBP JPY is an absolutely no, okay? GBP JPY is an absolute no. Euro USD, Euro pairs, try to stay away from them. They do work. It's not as same win rate. So just to make that sure. For crypto, we said Bitcoin works amazing. I'm gonna leave it your job. I'm so excited for you guys to tell me, yo, I backtested this pair, I backtested this pair, and I found this win rate, You know, I'm really genuinely excited for this because I'd be getting these messages, but I can't like really take them into consideration because they don't know the strategy fully yet, like how you do. Or I mean, even you still don't know it. I'll explain it soon. But that's why like I'm excited from you guys because now you guys know the strategy fully in depth, right? So, or soon you're gonna know it fully in depth. So I would be sure that you guys wouldn't make mistakes. And if you watch this far, this shows me how dedicated you are to actually learning the strategy and how serious you are. So yeah, that's it pretty much. We gonna go to the strategy now. Oh no, before you get excited, one more thing. Risk management. I know everyone want to skip this part, even me. Like, if it's up to me, I don't want to talk about this, but I'm going to make it quick. So, me personally, or you know what? Not me personally. How you should risk. On funded, You know what? I think I'm gonna skip this part for now. I'm gonna make a whole video about risk management because this is really, it's really different. Like, I can talk about it briefly. When I used to trade 10% funded accounts, I used to have a certain risk. Like, I used to risk only 1% per trade. But when I used to trade, let's say 6% funded accounts, I used to risk 0.5% per trade. You know what I mean? On a live account, in the beginning at least, I wouldn't recommend going more than 2% risk per trade. Even 2% is high. I would recommend staying at 1% per trade, 1% risk per trade. And I'm not gonna, yeah, like I would highly recommend you stay at 1% risk per trade. Of course, it's different. I know how it is for crypto and future traders, it's a bit different, but I highly recommend 1 to 2% risk per trade. That's it. That's, if I could sum everything up, I would say 1 to 2% risk per trade. Now, do I don't want to talk about myself about this because I do sometimes risk higher, but when I do so, I have small accounts. So I have flipping accounts, and I have what is it called? Like when you're saving money in one account. Forgot the word. Compounding. I have a compounding account. So I have a small account where I put small money in it, and then I risk super high in this. Like I just do high risk, high reward, high chance I lose the account, high chance I just flip it, a low chance sorry that I flip it because I'm risking a huge amount of this one. I do this mostly so I can actually keep good psychology on this one, on the compounding. The compounding account is basically my live account where I have a big amount of money and I risk 1 to 2% per trade, and I never go more than that regardless of what happens. My flipping account is my account where I actually risk high amount of percentages depending on the trade, depending on all of that. But instead I put small amount of money. I do this first thing just to, like, you know, get some rage out of me, to keep my emotions straight so I don't fuck up this account. Because if I lose this account, the compounding account, I basically lose a lot of money that I own, or the money I have in my training for trading. If I lose the flipping account, it's alright. Like, I'm not sad about it. Now, would I recommend you do the same? Not in the beginning. Flipping accounts is very easy because you could flip $1,000 to $20,000 in 1 week or 1 month, let's say. But in 1 week, you could lose the whole account because you're risking high. You know what I mean? So I would recommend staying away from flipping accounts until you actually master the strategy. Because look, a guy who can make 300-400% return on a flipping account doesn't mean he's profitable, because he is gonna end up most probably losing the account. But a guy who can make 50% profit, total profit of his account on a big account, compounding account where he's risking 1 to 2%, that guy is profitable. Because if you do the math, I don't want to do it, I don't want to make this video extremely long, but if you do the math, bro, starting with a small capital and actually compounding it, ask ChatGPT. If I have a $1,000 live account and I make 100% each year, how much would it be in 10 years? And you're gonna be shocked with the number. So if you start with $1,000 and you make 100% a year, look how much you're gonna make in 10 years. I'm not saying you're gonna be making 100% a year, by the way. I don't want to say anything about that because I don't know you. I don't know how you trade. I don't know how you're psych. I don't know nothing about you, so I can't tell you. And I don't want to give an estimation on how much you're going to be making because I can't do that, okay? So that's it pretty much. I don't want to go too much right now depth about risk management. If you guys would like me to do a separate video about risk management, going in depth, like how much I risk, how much you should risk, about funded accounts, about live accounts, and psychology videos and all of this, just let me know in the comments. I would definitely do that. I just need a break because this video is taking me Took me a couple of days and it's taking me energy and time, but it's okay. I hope it's gonna be worth it for y'all. So now we're gonna talk about, now we're gonna start with the actual strategy. I hope you guys are fired up. Because look, now it's what time is it? It's 5 a.m. here. So I gotta go to sleep. I'm asleep, I'm gonna wake up, and I'm gonna record for y'all the no wick strategy in depth. It was a long journey, guys. I'm excited for this. For the ones who've been watching until now, shout out to y'all, man. And you actually deserve to see the video. Alright, I'll see you soon. And until then, stay safe. I don't know why I'm telling you goodbye. For you, it's gotta be like, you gotta see this part, and then you gotta see the strategy directly. But for me, I've gotta sleep, wake up, eat, drink, blah, 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 shower, and then I'm gonna record it. Alright, man. See y'all soon. Peace out. Alright. Welcome back. Why do I keep welcoming y'all back? As if you're not gonna be watching the whole video at once. It's crazy, because in my head, like, you know, I was recording, and then I do some stuff, and then I go and I sleep, and I wake up and I eat, and blah, blah, blah. I even traveled around, and then I come back and I'm trying to explain to you stuff, you know what I mean? So that's why I'm like in a new mood. But for y'all, you're probably still watching it all together at once. Crazy. Anyway, so last time we were talking about, what were we talking about? God damn, it's been a while since I've been recording this course for a while now. Guys, don't underestimate how difficult it is to record a 3 hours for, I don't know how long this is gonna be, but it's gonna be probably more than 3 hours. 3-4 hours course, because yes, for you, you're gonna think, okay, this guy took 3-4 hours from his time and he posted it, but in reality, it's way more, because you know, the editing and all of that stuff. Plus, bro, it's actually tiring. You know, imagine when you have a presentation. If you gotta talk 15 minutes in a presentation, you know how difficult it is. So imagine when you record such a course, I have to talk non-stop 3 to 4 hours, bro. This shit ain't easy. But hey, as I said before, if I make at least 5 people profitable and change their lives after posting this video, I'm satisfied. Anyway, that's not the point, so let's lock in. So I remember, I remember. Last time I promised you all that now we're gonna talk about the strategy. But before we do so, I remember there's a small, tiny, quick thing that I know you're gonna be, fuck, man. There's a small, tiny thing that I gotta explain before we actually jump to the strategy, right? Which is how to set alerts. So if you already know how to do this, you could skip this part, it's not a problem. And then after that, we're gonna start with the strategy where I want everyone to be fully locked in, like, bro, like, everything I said is important, but when it comes to the strategy, like that's the most important part, right? So let me just cover the alerts quickly, and after that we can jump to the strategy, right? So basically, as you guys know, we have 24 hours a day, right? But we don't want to spend 24 hours trading a day. Some of y'all might not even have 5 hours to trade. Some of y'all might not even have 3 hours to trade a day. Me personally, I'm a busy guy as well. Plus, I don't like to sit on the charts and just watch the charts like and shake my head, you know what I mean? So there is a small thing that we could do, which is, so instead of you sitting on charts and actually like waiting to see a no wick candle and then like for no wick candle to show up, maybe it will show up, maybe it will not show up, and then you have to waste a couple of hours for that, and then no wick candle is gonna show up, like let's say like this one, and it's not gonna be valid. And then you're gonna start FOMO, and then you're gonna start taking bad trades. So it's up to you. If you wanna stay on the charts and just watch it and take trades, like that's how most of traders do all over the world, it's all right. I used to do that back in the days, but now I don't do that no more. Why? Because with this indicator that we talked about earlier, the X ghost, like the no wick candles, we can set an alert. What does that mean? So basically, whatever you're doing, you can be cooking, you could be, I don't know, out, you could be just laying down, watching a movie, whatever it is, studying, working. Some of my students do that. They still have work, they work 9 to 5, and they still take trades. Now, of course, at work, one of my students, he's an engineer. He's not gonna be working and watching the charts. You know what I mean? Hey, but if you're a doctor, don't do what I'm gonna tell you, because we don't want some patients to get sick. Anyway, so you could set an alert. What does that mean? Basically, you get a notification from TradingView to your phone. Yo, let's say your name is Sam. Yo, Sam, and no candle showed up. It's time to make some money. So you know what I'm saying? So yeah, that's what I do. So basically, I'll be like, right now I'm recording this video. I might get a notification on my phone telling me, yo, at Omar Nowick, there's a Nowick candle showing up. So then I'll receive it on my phone. I check it quickly in less than, takes me literally 10 seconds. Like once you get used to the system, it will take you 10 seconds to analyze it. You see the Nowick, okay, is it valid or if it's not valid? If it's a valid candle, then I would hop on the laptop or I would take it on the phone and then I would take the trade. If it's not valid, I would just skip it. So I don't need to stay on the charts the whole day. I would just get a notification whenever I want. Like that's the best part about it, to be honest. So yeah, so you might be wondering how to do that. I'm gonna explain to you how to do that. You go here on alerts. I don't know how to do it on the phone. I never done it on the phone. I do it on the laptop usually, but I'm pretty sure there should be a way to do it on the phone, like how to set the alert. But the notification you get both on your phone and on your laptop, so not a problem. So you press here, you press create alert, and then here I want you to lock in, right? It's very easy, very simple, just you gotta do the steps. So first thing, you choose the symbol you want. Let's say in this case we have GBP USD. And then condition, you choose the indicator, X ghost, candles, blah, blah, blah. And then here, you have to do up. And then the interval, it has to be the 15 minutes because we're trading the 15 minutes, right? I mean, I haven't covered this yet, but make it the 15 minutes. Don't make it lower. Okay? And then trigger once per bar close. That's it. And then expiration as much as you can. Like just push it to the max you can. So let me explain to you in simple words what this means. So symbol is basically the symbol, like the pair that you want to receive a notification on. In this case, I have a GBP USD. And then condition, where you just put the indicator. And then up or down means basically if the candle closes up or if it closes down. In this case, we have it up. And then the interval is the 15 minutes. You could press here 15 minutes, or I have it here as 15 minutes. And then trigger once per bar close. This is very important. Why once per bar close? Because I want to get the notification once the Nowick candle closes, not once the candle opens. Because sometimes you're going to see the candle opening, but still doesn't close. It opens as a Nowick and then it flips. So it's not a Nowick candle anymore. So we want it per bar close. So when the candle closes as a Nowick. And the expiration basically is, when does this indicator expire? Like, sorry, not the indicator, the alert. Like after, when it becomes April 12, I need to do this again, like set the alerts again. And then I press create. And then you see I have it here. Now this is just for the bullish candles, so when it closes up. Now what do I have to do? I have to do the same thing again. GBP USD, put the, what is it called? Put the indicator, and now instead of up, I want it down, because I want when it closes up and I want when it closes down. And then interval always 15 minutes, and then trigger once per bar close, and then the date, I just push it to the max. Boom, and then create. That's it. Same for the other pairs. You have to do it, unfortunately, you have to do it manually for all the pairs. It will take you like literally 2 minutes, and you have to do it like once every month, so it's not a big deal. So I'll go here, USDJPY, I put the indicator, put up, same as chart, trigger, once per bar close, create. And of course, I forgot to fix the date. Here, I fix the date, I push it as much as I can, and that's it. And then I do the same thing again, USDJPY, boom, the indicator down, same as charts, or 15 minutes, trigger once per bar close, and then I push it to the max. And I have to do this for every single one. I'm not gonna go over all of them, but you know how to do it. So now you have UJ, you have GU, and then you gotta set the other ones, AU, and if you want gold. It's up to you. Me personally, I haven't been trading gold often recently, that's why. And yeah, I'm deleting it because I have another account where I get the notification on, so I don't wanna get it on both accounts. Just saying. And yeah, that's it pretty much. That's how simple the setting up an alert is. Like, it's pretty straightforward. You don't need to overthink it, right? Now, that's it pretty much. Thank you for watching this. I hope you learned it. If you didn't, don't come and ask me how to do it. Just watch this again, all right? It's very easy. Now let's jump to the strategy. All right. Oof, this is gonna be a tough one. Now we're gonna jump to the strategy, guys. If you watched this whole video, congratulations. You actually spent a lot of hours. It's like 2.5 hours to reach this point. This shows me that you're a disciplined trader. This shows me that you're someone who's serious about trading. This shows me that you're someone who actually want to learn, because you didn't just spend 2.5 hours for nothing. You spend these hours to actually learn the strategy. You spend these hours to actually become profitable. And this means a lot to me, and take it as a motivation. Not a lot of people do that, all right? So if you actually watched this whole video so far, you actually deserve to know the strategy. And hopefully, from the bottom of my heart, and I genuinely mean it, I hope you become profitable, because you put in the time. You still haven't put in the work, unless you've been taking notes and stuff. Like, there's still a lot of stuff you gotta do even after you watch and learn the strategy, because it's not like you just learn it and then you're profitable, you know what I mean? You still gotta put in the time, the work, backtesting, demo, all of these stuff, which I'm gonna be talking about later. But if you just skip to this part from the beginning, because I'm gonna have a timestamp in the bottom, you could probably just jump to this part. If you did that, bro, don't watch this. Honestly, don't watch what I'm gonna talk about, because you're never gonna be profitable, right? The reason why I'm saying this, don't get offended. The reason why I'm saying this is because you skipped more than 50% of the strategy. The strategy is not just me explaining the strategy itself. It's about the trend lines, it's about the no-wick candles, about the indicators, about all of these stuff, the alerts, the imbalance, the everything we've been talking about. So if you just jump straight to this, you're not gonna understand. I said it earlier in the video. This video is connected, all of it. I made an order where everything is connected to the second thing. So if you watch the first part, you're gonna understand the second part. If you watch the second part, you're gonna understand the third part. But if you jump from the first part to the strategy directly, you're not gonna understand shit. I'm being completely honest with you. Now, for me, personally, as a content creator, someone who's posting on YouTube, even if you skip the whole thing, I don't really care. I'm still getting views, you know what I mean? You're still gonna be counted as a viewer for me. So I don't care about that. But I'm talking for your sake. I'm not gonna benefit anything if you watch the whole video or if you just watch the strategy itself. For me, it's the same. All right? I'm being completely transparent with you. I'm doing this for your sake. If you don't watch the whole video, you're not gonna understand what's going on. But it's up to you. If you think you know that how to read trends the way I do, then good for you. Maybe you will learn something. But in my opinion, you should still watch the whole video. Just say it. I didn't record all of these hours for you to skip it and then after that, because I'm not sure you're gonna be able to become profitable if you skip directly without reading and learning how to read trend lines the way I do. I'm just saying. Anyway, as usual, guys, I'm gonna skip the yapping. I'm gonna chart out, I'm gonna draw first by myself, and then we're gonna jump to the charts and we take real life examples, all right? So, oh my God, this is exciting because this is a lot of stuff now we're gonna cover. So now actually lock in. You remember everything we talked about is important, but now is the real sauce. This is the moment everyone been waiting for. So, it's very easy, very simple, but you need to learn it. Oh my God, I'm explaining the simple strategy and then I'm gonna go in depth, all right? So, in a simple terms, this is an uptrend. We have a low, high, higher, low, higher, high, higher, low, higher, high. And then in this uptrend, we got a bullish no-wick candle closing with no bottom wick, like how we talked earlier. Now, when we see these bullish no-wick candles with no bottom wick, what do? That's when we enter buys. Now, where do we enter buys? Do we enter after the candle closes, or do we enter after price retraces to the no-wick? We enter after the price retraces to the no-wick. So what do? Once we see this bullish no-wick candle closes like this, we have to wait for price to retrace back to the no wick, and that's when we enter buys. Now, where do we place our stop loss? We place our stop loss at the most recent low. In this case, it's the higher low. And then take profit is 1-to-1. Now, let me explain it to you in simple terms. We're in a bullish trend. A bullish no wick candle close with no bottom wick. Let's say it closed like this. We wait for price to retrace back to the no wick candle here. And once price retraces to the no wick candle, we enter buys. We put our stop loss at the most recent higher low and take profit at 1-to-1. That's it. That's it. Now you might ask me, yo Omar, do we put a buy limit or do we enter manually once price retraces back? To be honest, it doesn't make a big difference. Whatever you prefer. Sometimes I do this, sometimes I do that. Depends what I'm doing. If I'm watching a movie, let's say, and I got nothing to do, I would just wait for it. And sometimes if I'm, let's say, busy, I'm in a rush, I would put a buy limit. Most of the time I put a buy limit because it doesn't make a big difference, all right? So that's it. Like, that's literally the whole strategy, guys. You see, the secret to this after all, isn't the strategy. It's everything you've been through. Now, of course, I'm going to explain to you situations where you shouldn't take the no wick candles, the rules, all of these stuff, the A setup, B setup, C setup. Don't worry, it's coming. Now, this is a bearish example. Same concept, it's just reversed. Boom. We're in a bearish trend. A bearish no wick candle showed up with no top wick. What do we do in this case? You should already know it by now. We wait for price to retrace back to the no wick candles. That's where we enter sells. Stop loss at the most recent lower high, confirmed lower high, by the way. You remember when we talked about this, not potential, confirmed. Okay? Stop loss there. Take profit exactly at 1-to-1. I'm not going to cover what's potential and what's confirmed lower high and higher low. So for the people who didn't watch the previous parts, they're not going to understand. So you wait for it. Price retraces. You put stop loss at the most recent lower high and take profit exactly at 1-to-1. Once price retraces there, you enter the sells. And that's it. That's pretty much it. Now, what are some rules you need to cover? First rule is, of course, it has to be one of the valid pairs. So basically one of the pairs that we trade, like USD JPY, JPUSD, AUD USD. Gold, I've been away from gold for a while. It still works on gold. It was actually, this strategy was founded on gold, but recently gold haven't been the best, so that's what I'm trying to avoid as much as I can. Price has to come back to the no wick candle within 10 candles. Price has come back within 10 candles. I'm explaining it for 1 second. Let me just lock in. What else? No imbalance against us. That's it pretty much. So it has to be one of the valid pairs. Price has to come to the no wick within 10 candles. No imbalance against us. So price has to come back here. What do I mean? It has to be one of the valid pairs. You already know it. Price has to come back to the no wick candle within 10 candles, which means once the no wick candle closes, price has to come back and tap the no wick candle within max 10 candles. If more than 10 candles pass by, the trade is not valid anymore. Okay? That's it. Like if we come back within 1 candle, 2 candles, 3 candles, 4 candles, it's all right. If 10 candles pass by and we still don't tap the no wick candle, then it's not valid anymore. And the less, the better. The less candles pass by until we come back and retrace to the no wick, the better. The higher the chance of hitting. Imbalance. If you see an imbalance, let's say there is an imbalance here, and my stop loss got to be here, that's not good. If my stop loss is below the imbalance, then it's all right. But if the imbalance is, let's say, my stop loss is here, but the imbalance is somewhere, I don't know, here for example, then I try to avoid these trades. Why? Because I know, let's say here's the imbalance. or for the ICT traders, here's the fair value gap. If the imbalance is here, I don't want to take these trades. Why? Because I know there's a high chance price is going to go down first to that imbalance and then reject. What will that do? It will hit my stop loss and then it will go and hit take profit. You get what I mean? So yeah, that's it. And there's some rules where, so these are the rules for, let's write it like this. Rules that makes the no wick valid. Rules that makes the no wick not valid. Oh yeah, and I forgot, oh my god, this is one of the most important rules. Time frame should be 15 minutes and above. So the no wick candle has to be on the 15 minutes or above. So if the no wick happens, so the time frame where you're analyzing, it has to be 15 minutes or above. Me personally, I've been sticking to the 15 minutes and that's it. All right. Now, is there some traders who trade the strategy on the 5 minutes? Some of my students do that. But the only problem with this is will it work? It will work. But there will be too much noise, I would say. The trend would be shifting too much. You're not going to be able to see the trades really good. That's the only problem. Will it still work? It will work, but I would highly not recommend it because this would cause more confusion than benefit. So it causes more harm than benefit. You know what I mean? That's what I would say. Stay away from the 5 minutes and the 1 minute. Me personally, I stick to the 15 minutes and that's it. I don't even look at the higher time frame. You could, if you want to have a more accurate analysis, but me personally, I want to keep the strategy simple. That's why I want to stick to the 15 minutes. Whatever happens with the 15 minutes, that's it. Because once you start looking at higher time frames, you're going to see, let's say, a bullish no wick on the 15 minutes and a bullish trend. And then you're going to see on the 30 minutes, a bearish no wick and a bearish trend. And here you're going to start getting confused because both of them are valid. The 30 minutes is valid, the 15 minutes is valid. And then both of them sometimes might end up working. Both of them might end up not working. So for you to not get confused, I would say stick to the 15 minutes and that's it. Okay? That's something I would highly recommend you to do. Stop loss at the most recent low in buys. Stop loss at the most recent high in sells. Take profit 1-to-1 regardless. Okay? Take profit is exactly at 1-to-1 regardless. I'm explaining to you why here I'm not saying higher low or lower high, because sometimes your stop loss might not be at the higher low. It might be at the most recent low, which I'm also cover, so don't worry. And yeah, what else do we have? It has to be one of the valid pairs. Price has come back to the no wick candle within 10 candles. No imbalance against us. Time frame should be 15 minutes and above. Stop loss at the most recent low and buy. Stop loss at the most recent highs and sell. Take profit 1-to-1 regardless. You understand what I mean with take profit at 1-to-1, right? So after you set your stop loss, you just gotta match it to be 1-to-1 here. You see this? It has to be 1-to-1. That's it. And I think once I cover it on the charts, it's gonna be way easier. Now, rules that make the no wick not valid. Okay? God damn, there's a lot of stuff I need to cover. First one of them is if price comes very close to the no wick and then rejects, the trade is not valid anymore. If What else do we have? Yeah. Second thing, if price creates structure before tapping. All right. So what do I mean with if before you take a screenshot, I'm gonna explain everything and then I'm gonna put it on the side and you can take a screenshot of this, all right? So if price comes very close to the no wick and then reject, it's not valid anymore. What does that mean? Basically, we hear, right? If price comes very, very, very extremely close, usually I say 1 to 2 pips, 2 pips, let's keep it at 2 pips in USD, JPY, GBP, USD, and AUD, USD. If price comes close, let's say, you have a buy limit here, price then decides to reject from there and goes and hits take profit. In this case, that trade is not valid anymore. Why? Because what is the job of the no wick? It's a rejection area. Once price taps it, we know that price is going to reject from there. If it comes, sometimes price decides to come very close to it and then reject from there. Now in this case, what do? The no wick candle already gave us what it's supposed to give. It gave us the effect, it gave us the rejection. So technically it's not valid anymore. So even if price decides after to tap the no wick, like here for example, if price decides, okay, let's come back and tap the no wick might still reject, but most probably it's not gonna reject. Why? Because it already gave us the effect. So what we were expecting from the no wick candle already happened. That's why this doesn't work anymore. It's the same concept of when it really taps it, and then hits take profit, we can't still enter this again because it already gave us its effect. It's not valid anymore. It did its job. Like the no wick is gonna tell you, yo, let's say we said your name is Sam. Yo, Sam, my job is done. Why are you requesting too much from me? I promised you to reject 1 time. I never said I'm gonna reject the price twice, 3 times. You get what I mean? That's why it's very important you take this into consideration that once we come very close and reject and we hit take profit, it's not valid anymore. All right? Another thing that you need to take into consideration is if price creates structure before tapping the no wick, it's not valid anymore. What do I mean by that? Let's do this. So let's say price comes here, creates a new higher high, and now it's gonna go tap the no wick. Okay? This trade wouldn't be valid. Why? Because as I explained earlier in the video, now we have here a higher low, right? And then we have a higher high. So once we come back and tap the no wick candle, it's gonna change the trend. The trend here is gonna shift from an uptrend to a downtrend. That's why it's not valid, because technically when you tap the no wick candle, you're gonna be in a downtrend now. You're not gonna be in an uptrend no more. So this is something it's very important that it's basic price action, but I'm explaining it in depth because in case you're a beginner, price here would shift from an uptrend to a downtrend. So it wouldn't make sense to take this trade anymore. That's why once we create the structure, and now, okay, we're still in an uptrend, but now the no wick candle is below this structure. So we know once price is gonna come and tap this no wick candle, it's not gonna be valid because we already created a new higher low. And with this higher low, once we tap this no wick candle, it's already gone. Like now we're in a downtrend. Same concept for here. If price decides to come here, and then boom, our order never got filled. Our order never got filled. But here we created a new lower high. Now what makes you think, okay, now you might be thinking, okay, but we still haven't had 10 candles. Yeah, that's true. But once we come back and tap this no wick candle, we're gonna shift the trend. The trend is gonna shift from a downtrend to an uptrend before we even tap the no wick candle. And as I said earlier, the trend is the most important part about this strategy. So here, once we shift the trend, now we're in an uptrend. We're not in a downtrend no more. That's why it's very dangerous that you take this trade, because after we broke this, we're in an uptrend now. So we know that price is not gonna reject from the zone because now we're in an uptrend. All right? Take a screenshot of the rules and I'm gonna show you some real life examples about this before I move to the ABC setups. Wait, all right, cool. Take this, print it out, write it down on a piece of paper. I don't know, put it in your notes, put it in a Word document. It's very important because I want you to follow these rules and don't try to bullshit these rules, all right? I want to also cover one more thing, actually. This is a bit advanced, but this is for this part, for the one-to-one take profit. I know, especially from my students, some of my students still don't trade this as one-to-one. Some of them trade it 1-2. Some of them trade it 1-3. Now you're gonna be like, oh, because we've seen this, that a lot of the times, price after it tests the no-wick candle, it rejects and it goes 1-2, 1-3, and etc. Like it gives more than 1-1. Now, is this something you could do? Absolutely, you could do. You don't have to stick to the 1-1. You could go to 1-2, 1-3. But here's the catch though. If you do that, just know that your win rate is gonna drop heavily. You're not gonna be able to achieve 90 or 80, not even 70% win rate. If you jump from 1-1, 1-2, you're not gonna be able to achieve even 70%. Why? Are you still gonna be profitable? Absolutely. You could be profitable with 1-2 even if you have a 50% win rate. And you would actually be hella profitable. But for me, for my psychology, I don't like that. I prefer to have 1-1 because I think about it like this. If you flip a coin right now and you enter buys or sells randomly, okay? Random, like you close your eyes and you enter buys or sells. What are the odds of you hitting take profit? 50-50, right? It's like flipping a coin. But when you add the trend lines, the trade jumps from 50 to 70%. That's the chance. And then when you add the no wick, it jumps from 70 to 90. You get what I mean? Or 70 to 80. And then when you add the imbalance, it jumps from 80 to 90, and so on. That's why I don't like to trade it 1-2, but feel free to do whatever you want. If also I see a lot of students, they trade it with other confluences. That's something you could really do. Some of them like to add support and resistance. Let's say they only take it if there's a support here. Support protecting the trade. You could do so. No one's gonna stop you. Would I recommend it? It's up to you. If you want to add liquidity to this, if you want to add fair value gaps, if you want to add support and resistance, you can do so. Me personally, I trade it like this. I just trade it based off trends and no wick candles. I don't have any extra confluences. But if you want to do so, no one's going to stop you, all right? Now let's take some examples. And let's see. I'm going to see some examples regardless if it's a win or... Oh, yeah. Wait. This is very important. Very, very important. I mean, I covered it before, but yeah. That trade is not valid if it's early Asia or late New York. So, if you see the setup, you know, first couple of hours of Asia, once Asia opens, before that, never trade these, okay? If like the conversion from New York to Asia, never try to trade these because the market is unpredictable. Sometimes you will see such gaps like this one right here. Price, you don't know what price is gonna do. That's why I try to avoid early Asia. And same thing for late New York. Random spikes happen. You can never know what's gonna happen. So if you're in a trade and then there's this spreads hour from New York to Asia, close the trades before that regardless. Don't risk it. If you're in a win, if you're in profit, if you're in drawdown, close the trade before the market closes. And don't hold overnight, or at least in my case, overnight. If you live in the US, it's probably in the afternoon. Just don't hold the trade from New York when the zone is shifting from New York. The session is shifting from New York to Asia. These hours I want you to skip. So last 2 hours of New York, skip them. And first 2 hours of Asia, skip them. This is very important, by the way. Okay? Will it make the trade not valid? No, but it will definitely reduce your win rate by a lot. Like, I'm talking a lot. So, first couple of Asia, we're skipping that. First couple of New York, we're skipping that as well. Okay, now we can take the screenshot again. Alright. Before we cover the ABC, what else do we have? The ABC and the Omar entry. Okay, cool. So let's see random examples. You see these for example, like this one still worked, but I wouldn't take these, okay? This is all consolidation, I'm not gonna look at it. Perfect. This is actually one of the trades I took this week. Like you see, consolidation, yeah. Let me write it down as well. God damn, I keep remembering the rules randomly. avoid trading horizontal trends / chop / consolidation. So if the market's moving sideways like this, or if you see random spikes, try to avoid these. Price is not predictable then. We don't know what's going to happen. When I want to take a trade, I want to see a clear trend. I want to see an uptrend. I want to see a downtrend. I don't want to take trades when the price is choppy. You know what I mean? That's something also very, very, very important. So you need to know how to read the trend. If you can't read the trend, that's how you know this is a bad setup, and that's something you should avoid. Okay? So as you can see, this is an example of choppy market. The market is moving sideways. Are we in an uptrend? Are we in a downtrend? No one knows. You see what I mean? So this whole price action, I don't trade. I just avoid them. But for example here, we're in a clear bullish trend, right? Clear bullish trend. A bullish no wick candle showed up with no bottom wick. Cool. We enter buys. Where do we put the stop loss? We put the stop loss at the most recent higher low, which is here. As you can see, we have a low, high, higher low, higher high. I enter buys here at this no wick because I always enter the trade at the most recent no wick candle. You could have entered it at any of these, you would still have hit take profit. So I put the stop loss here, and then I put take profit at 1-to-1, and that's it. That's it. That's it. Let's do another example. As you can see here, I might also talk about this. You remember the internal trend we were talking about? So the external trend is an uptrend. But here, we formed an internal downtrend. Excuse me. Here we formed an internal downtrend. So we have a high, low, lower high, lower low. And then two bearish candles showed up with no bottom wick. What do we do in this case? We enter sells, right? As you can see, we're in a clear downtrend. A bearish no wick candle showed up with no top wick. We enter sells, top loss at the most recent lower high, and take profit at 1-to-1. That's it. Same one for this one. When a clear bearish trend, internal bearish trend, and no wick showed up, put stop loss at the most recent lower high, and take profit exactly at 1-to-1. That's it. You see, guys, the strategy is very, very extremely simple. Let's see another example. Okay. Boom. Look how many of these work, guys. It's crazy. Like, it's crazy. We're in a clear bearish trend, right? You can see it. We're in a clear bearish trend. A bearish no wick candle here showed up with no top wick. You know what? Let me do this. So I explain to you what happened. We're in a clear bearish trend. A bearish no wick candle showed up with no top wick. Okay, we enter sells. Stop loss. I know you're wondering why it's 1-to-2. It should be 1-to-1. Stop loss at the most recent lower high. Where's the most recent lower high in this case? Look. Boom, okay. All right. This is the lower high. And then we created the lower low. We created a new lower high. Create a new lower low. Potential lower high. Why is this not a lower high? Because we still didn't break the lows. You see? So until here, we don't know that this is going to be the lower high, but we're still not sure because we still haven't broken the lows. What do we do in this case? Very easy. Very simple. We enter sells. Stop loss at the most recent lower high, which is here. Some breathing room as well. And we make it 1-to-1 take profit. That's it. That's it. We enter sells. And we let the magic happen. Boom. Take profit hit. See what I mean? Now, why didn't I put my stop loss here? Because before we broke these lows, this wasn't the confirmed lower high yet. Got it? Now, even if you did have it here, for example, which you shouldn't because that's not the rule, you would still have hit 1-to-1. Got it? But that would be you breaking the rules. This is the lower high, at that moment at least. Now, I know some of you are going to be like, yo, Omar, because I have my stop loss here. you're gonna be like, yo, Omar, but you could have made 1-1, 1-2, 1-3. Yes, you see, like that's what I talked about earlier. It is possible that you make 1-2, 1-3 on these setups. It's just, again, I'm gonna tell you this again. It's up to you. You could make it 1-2, you could make it 1-3, but it's just not the way I trade. I trade 1-1 and that's it. I just have peace of mind. I wanna hit my take profit quickly, as fast as I can, and just go on with my day. You know what I mean? Let's see if we get another one to show the example. All right, cool. This was news, no problem. God damn. Yeah, and then you see, this is when like the market shifted from New York to Asia. These ones we don't trade. This was like overnight as well. Like here, I'm not gonna enter neither this or this, because what is this? Like, are we in an uptrend? Are we in a downtrend? You see, this is one of the rules I was talking about. These you're not allowed to take. So I'm not allowed to take this, neither this. And although we're not allowed to take this, it would have worked out. But still, just because it worked out doesn't mean it's valid. You get what I mean? God damn, I skipped too much. Then here, for example, we got another one. See, we have a low, high, higher low, higher high. And then a no wick candle. Have entered buys, stop loss in the most recent higher low, and take profit 1-1. In this case, it wouldn't have worked. Wouldn't have worked out. Part of the game. Now, if you took this one, it would have worked out. So this one, if you split the position into two, which is something I also do sometimes, you would have one on this one and you'd have loss on this one. But if you just took this one, you would have lost. Okay? Another example. You can see we're in a clear bullish trend. We broke the structure. Now we're in a bullish trend. A bullish no wick candle showed up with no bottom wick. 1, 2, 3, three bullish no wick candles. It's up to you how you want to split your positions. I said it before in a video. Actually, yeah, I gotta cover it here. So, what is the benefit of entering at the last one? And what's the benefit of entering at the lowest one? In this case, in the buys. In the sells, it would be the opposite. If you want to take the most recent one, you would guarantee that you will take most trades. Why? Because when you enter buys here, you know, okay, you're gonna end up taking this trade regardless. But if you wanna, because all these are valid, right? This one is valid too. It would be the same stop loss, same take profit, 1-1. Same for this one. Will be same stop loss, same take, 1-1 take profit. Now, here there's something you need to take into consideration. It's up to you which one you want to do. I even tell this to my students. It's up to you which one you want to take, okay? But you got to know the catch of this. If you take the highest one always in the buys, like in this case, you will most probably take the most trades. But the catch of that is your win rate is going to drop. Why? Because here, for example, what if price comes to this no wick only and then rejects and hits take profit? If you had your buy limit at this one or this one, you wouldn't have got the trade. But at the same time, here's the catch. If you had it on this one, you'd have a higher chance of hitting take profit. Because look, once price taps it, you're requesting the price to only move this much. You're requesting the price to come here. And that's it. Because you will see another case where price is going to come to this no wick and then go to the take profit. You get what I mean? And then it's going to hit this take profit, but not this take profit. So what are you going to do in this case? It's up to you. You have three options. First option, taking the highest one in this case, or like, let's say the most recent one. Lowest win rate. Highest chance, or no, highest. Lowest win rate. More trades. Option number two, taking the best one higher win rate, less trades. Third one, splitting the position. This is like same win rate, same trades frequency. You see what I mean? So if you want to take the most recent one, you're going to take the most trades, because what if price just comes here, taps it, and then goes straight to TP? But at the same time, you're going to have a lower win rate. Why? Because lower win rate than these ones, because what if price comes here and then only here? You get it? So that's why taking the most recent one will have the highest amount of trades, but will have the least win rate. While on the second hand, if you take these ones, you will have a higher win rate, because you're asking the price to not reject too much, but at the same time, you're going to take less trades, because what if price just comes here and rejects again? And then the best option, which is splitting the position, if you split it here, half, let's say you want to risk 1%. If you risk 0.5% here and 0.5% here, if price decides, okay, let's tap here and then reject, you're chilling. And then if price decides, okay, let's have both of them, then you might win one trade, lose one trade. Because price might come here, tap this, hit this take profit, and then hit stop loss of this one. So it's a double sword edge, which you can choose whichever one you want between these. I mean, these don't happen very often. That's why I'm not going to stress about it too much. But you could choose whichever you want, as long as you do whatever you want to choose, always the same. Okay? I personally been trading the most recent one. So I always, when I see a no candle, I always take the most recent one. And that's it. If you want to do the same, if you want to like just keep this strategy simple, if you want to just buy peace of mind, always take the most recent one, and that's it. And look what happened in this case. Okay, so all of them got activated, and all of them hit take profit. Yeah, so all of them got activated, all of them hit take profit. So whichever one you took, you would have made the same amount of money, which is crazy. But yeah, it's up to you. And then as well, I explained this, but I'm gonna go over it again. You see we're clear downtrend. Stop loss. You see here again, whichever one you want to choose. Which one do you want to choose? If you choose this one, 1-to-1, you would have hit take profit as well. It would have taken forever though, but you would still have hit take profit. If you would have chosen this one, you would also have hit take profit. And if you would have split the position, you would have hit take profit on both of them. So it's really up to you, okay? It's really up to you. Another position here, you can see. This is a C setup, by the way, but which I'm gonna cover later. We're in a clear, I don't know if this one worked out or not, but we can see now. Even if it didn't, my point is not to prove to you that this system works. My point for me now is to teach you the system. You see, so we're in a clear bearish trend here. We have a high, low, lower high, lower low, lower high, lower low. And then price did a change of character. The trend shifted here. And then we have a new bullish candle, bullish no candle, and an uptrend. What do we do in this case? We enter buys here. Stop loss at the most recent low. That's why I said not always higher low. So in this case, it's at the most recent low. And let's see what would have happened. Yeah, you would have a take profit within 15 minutes. You see, trend shifted. No candle showed up. Price came back, tapped it, and then price hit the take profit within like 15 minutes. Okay? I think once I explain the ABC, you're gonna understand the strategy even more. Now, that's it pretty much for the strategy. That's like should I cover more? I don't know. The thing is, I wish I did this on I need to do a live stream for you guys to ask me questions. Like, guys, it's crazy. Like, look how many of these work every day. Look at this. Look at this. Look at this one. It worked out. This one didn't work out because you see, more than 10 1, 2, 3, 4, 5, 6, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. It's more than 20 candles for price when price came back to this candle. Plus, it's also one of the rules. Oh no, it's not. You see more than 10 candles pass by to come back to the price. That's why this one didn't work out. But look at this one. Crazy. Zero drawdown. When a clear bearish trend, a bearish no wick candle showed up with no top wick. Price at the most recent lower high, take profit 1-to-1. That's it. Like, guys, that's literally it. Same, this one, although it worked out, but this one wasn't valid. We're in an uptrend here, so I'm not gonna count it. We're in a clear bearish trend. Look at this. When a clear bearish trend, a bearish no wick candle showed up with no top wick. Stop loss at the most recent lower high. Take profit 1-to-1. That's it. This one never got tapped. It's all right. Same concept here. We're in a clear bearish trend. A bearish no wick candle showed up with no top wick. We enter sells. Top loss at the most recent high. 1-to-1 take profit. Same concept for this one. This one would have taken forever. When a clear bearish trend, bearish no wick candle showed up with no top wick, enter sells, stop loss at the most recent high, 1-to-1 take profit. I probably wouldn't have taken this just because of how long it would take, because the stop loss would be huge. You get what I mean? Same one for this one, but this one ended up hitting stop loss. We have a high, low, lower high, lower low. Would have entered sells here, stop loss at the most recent lower high, take profit 1-to-1, and this one would have hit stop loss. Same concept for this one. We have a high, low, lower high, lower low, potential lower high, and then we found a bearish no wick candle, no top wick. We would enter sells. Stop loss would be at the most recent lower high, and take profit would be 1-to-1. And yeah, you can see we would have hit take profit within 1 hour. See, when price retraced, enter sells, top loss at the most recent lower high, take profit 1-to-1. And then you have, okay, you see? Guys, is this valid? Yes, it is valid. Why did it not work out? Because it was early Asia. I know the timing here. It's early Asia, that's why. This was when the market shifted from New York to Asia. Let's do some quiz for y'all, actually. All right. Is this no wick valid? We're not gonna talk about if it worked out or not, and we're talking if it's valid or not. Would this be valid? The external trend is an uptrend, but the internal trend is in a downtrend, right? So it would be valid. Why? Because we have a high, low, lower high, lower low. So we'd enter sells here. Stop loss would have to be at the most recent lower high, and take profit would be 1-to-1. And this trade would have ended up hitting stop loss, I think. Yeah, unfortunately. Would this be valid? No, it's not valid. Why is it not valid? Because we're in an uptrend. And this is a bearish candle in an uptrend. You see, it's against the trend. That's why we cannot take these ones. What about this one though? Is this valid? Yes, it is. Why? We're in a bullish trend. A bullish no wick candle showed up with no bottom wick. We would enter buys, stop loss at the most recent lows, and take profit 1-to-1. What about this one? Would this be valid? No, it's not. Why? Because we're in a bullish trend. A bearish no wick candle showed up with no bottom wick, but we're in a bullish trend, so it's against the trend. We cannot take these. What about this one though? Would this be valid? Yes, it would. Why? Because we're in a bullish trend. A bullish no wick candle showed up with no bottom wick. I would have entered the buys here. Have the stop loss here at the most recent higher low. And take profit 1-to-1. Guys, I'm showing you, like, it's crazy. Like, this is like, this would be valid, but this, I can tell this is news, so that's why we're not gonna count it. But this is obviously valid. And so on. I don't wanna keep going on. I don't wanna make this video too long. So yeah. One more thing actually I wanted to discuss here. When you place your stop loss, always leave breathing room. What does that mean? So basically, if your stop loss is, let's say, 20 pips, I want you to put 2 more pips breathing room. That's for spreads, and that's for in case we don't want liquidity grabs, we don't want anything to stop us out. So I don't want to see price hitting my stop loss exactly on the dot and then hitting my take profit. That's why it's always important that you leave breathing room. So I usually make a 10% rule. What do I mean by this? Let's say I'm entering buys and my stop loss has to be 10 pips. I would make my stop loss 10, I would add to my stop loss 10% of that. So if my stop loss is 10 pips, I will make it 11. Okay? If my stop loss was, let's say, 20 pips, I would make it 22. If my stop loss was 30 pips, I would make it 33. All right? And so on. If it's 40, I would make it 44. If it's 5, I would make it 5.5. And so on. Just because I don't want to see, let's say, liquidity grabs or any of that. Like, just to protect ourselves. Like, let's say, for example, I'm going to show you exactly what I mean on the charts. Let's say we enter this cells, right? My stop loss is here, 17.4. I would add 1.7 more pips. Usually I don't like really look into it, but let's say it's here, 17.4 pips. I would just make it 20 pips, you know what I mean? Like, it's very important you leave breathing room so price doesn't just spike up, hit my stop loss, and then goes to take profit. That's a very important thing you need to take into consideration. Like, I don't know. Let's say here, we take these buys. My stop loss is, you see, I automatically do it like without even realizing. You see how I leave breathing room always? Let's say here my stop loss is 13.7. I would make it 15, for example. Got it? Why? Because I don't want to see price hitting my stop loss exactly on the dot and then rejecting from there. Just something very important like you do. Cool. Cool. So these are the rules. Very easy strategy, guys. Very simple. If you didn't understand what I've been talking about, please rewatch this again. It's very important. I dropped a lot of sauce in this, I don't know, let's see how many minutes. In this last hour, I dropped very important sauce. So don't sleep on it. Don't sleep on it. Okay? Now, let's rank the setups ABC. What do I mean by that? What do I mean with the ABC setup? Let me think if there's anything else I need to cover. Pretty confident that's it. So, now we're gonna talk about the ABC setup. This is basically how I rank my entries and their probability of working out. So, as you guys know, I always say we have a 90% win rate, no Wick strategy. But do all entries have 90%? No. Not everything has a 90% entry win rate. Some of them have, some of them don't. Now, how do you know which one has a 90%, which one doesn't have a 90%? And how do you know if what you're doing is a 90% or not, or which one to choose? I'm gonna talk to you about it. So let's start actually with the C setup. The C setup, okay. A, B, C. No Wick setups. Probability. Should I start with the A or should I start with the C? Nah, you know what? I'm gonna start with the C. I'm gonna start with the C. I'm gonna start with the C setups. I think it's the best. Or not the best, like, so you guys stay excited to see the A setup. So for the C setup, now we're in a bullish trend, right? Bullish, clear bullish trend. When price here does a change of character after we break the higher low, now we're in a downtrend, right? But we still haven't done the 3 steps verification, the one I talked about. Like, we still haven't done this and this. So we're still not in a 100% sure trend. Now, let's say in this case, the bearish candle is the one that broke this trend. A bearish no-wick candle is the one that broke the trend. Or even like this, a bearish no-wick candle came here, and then another candle came and did the change of character. Cool? In this case, I think if I explain it with the bearish candle, you can understand it better. You see how when a clear bullish trend, now here we shifted the trend, and then the candle that shifted the trend was a bearish no-wick candle. Now we still don't have a high, low, lower high, lower low. Because every time I was telling you, yo, when you want to enter sells in this case, your stop loss should be at the most recent lower high. That's how I've been telling you about the strategy, right? But in this case, there is no lower high. So where do you put your stop loss? Because like we still don't have a lower high. In this case, this is the C setup. Because in this case, I would just wait for price to retrace back to the no-wick candle. I would enter the sells here, and I will put my stop loss at the most recent high. So whichever is the high, I would just put it there. And I will put it 1-to-1. That's it. I don't have a higher low, I don't have a lower high, so this is my C setup. And this one has a 70% win rate chance of hitting take profit. Because here is the one that broke the trend, no-wick candle showed up, I wait for price to retrace back there, enter sells, stop loss at the most recent high in this case, not the lower high, and take profit at 1-to-1. Don't worry, we're gonna cover it through the chart as well to make it more clear. But let's do the bearish example as well. So we're in a clear bearish trend. Here price shifted from a bearish to a bullish trend. Let's say the one that switched the trend was the bullish no-wick candle. Now we're in an uptrend, but we're still not in a confirmed uptrend. Why? Because we didn't see something like this. So we still don't know if we're in a clear bullish trend or not. We just got a change of character. We never got a break of structure. So in this case, would this be valid? Yes, it would be valid. But once price comes back to the no-wick candle, I would enter the buys. I would have my stop loss at the most recent lows, and my take profit would be 1-to-1. Okay? Got it? That's it. But this would have a 70% win rate chance of hitting take profit. Let's see a real life example about this. Yeah, oh my God, perfect. Perfect. This is I mentioned it in the video as well. So, you can see when a clear downtrend, right? Boom, boom, boom. We have high, low, lower high, lower low, lower high, lower low. Here price made a change of character. This is the real change of character, not this one. Forget about this one. Here is where trend shifted from a downtrend to an uptrend. And look what happened after. A bullish no-wick candle showed up. So here we would enter buys. But usually our stop loss got to be at the higher low. But there is no higher low. So we put our stop loss at the lows in this case. And take profit at 1-to-1. In this case, is it valid? Yes. But instead of having a 90% chance of working out, it would be 70%. Estimate, okay? It's a bit higher than 70, but I don't want to go too much into details and numbers. Cool? So that's the C setup. Now, very easy, guys. I hope you understood it. Like, I don't know if I should say it again. It's very easy, very simple. Maybe I could find another example for the bearish. It's gonna take me a while. C setups don't happen often. It's gonna take me a while, probably. Oh wait, this one wasn't valid, by the way. Now I'm looking at it. We became in a downtrend, and here we became in a bullish trend. Yeah, this one wasn't valid, or it was. Yeah, it wasn't valid. Just so we can ignore this. It's a mistake. Technical difficulties, guys. All right, now let's move to the B setup. So now you know the C setup. Now, I mean, to be honest, you don't really need to know these, but I'm just telling you so you to know when to feel more confident, and I'm gonna tell you how to benefit from this. Now let's do the B setup. Let's say we're in a bullish trend, clear bullish trend, clear bullish external uptrend, and then price here decides to become in a downtrend. You see? So, for the ones who watch this video from the beginning and know about trend, I told you, a change of character happens after we break the higher low in this case. Or I mean, I did cover what's the internal trend, so I don't need to go over it. Here we have an external uptrend, and we have an internal downtrend. Now, are we allowed to take sells in this internal downtrend? To be honest, yes. And I'm not gonna lie to you, I even prefer taking the sells in this internal downtrend than taking buys in this uptrend. Because the way I look at the trend, I don't look at the trend overall. Like I don't look at it like this. I always look at the most recent leg. So the last leg. What do I mean by leg? I mean the last thing that was happening. So this is the last movement. What was the last movement in this case? The last movement, we were in a downtrend in this case. The trend was moving downward. That's all I care about. I don't care about the whole external trend. I care about what was going on at the end. So, in this case, if we see a bearish no wick candle here, would I take sells here? Absolutely. And actually, this would be my B setup. And I would have an 80% win rate on this one. So I would take sells here. And I would have my stop loss at this lower high. And I'll have my take profit at 1-to-1. That's it. You know what I love? For me, my best setups are the B setup. They're my absolute favorite. And the reason for that is they're hit take profit usually the fastest because we don't have it's not a lot of stuff going on. Like the stop loss has to always be small in the B setup. That's why I will either hit stop loss or take profit quickly. Because once price retraces to the no wick, I would enter the sells. Stop loss would be at the most recent lower high, and take profit would be at 1-to-1. And that's it. Now, if we had here a bullish candle, let's say, bullish no wick candle, and let's forget about this one. Boom, like this. Would I be comfortable taking this buys here? No. Why? Or will it work? Most probably it will end up working. Like something like this, something like this. Will it be working? Most probably. Like I would still be able to take the buys here, stop loss at the most recent higher low, and take profit at 1-to-1. Most probably it will end up working. The only reason why I don't like it is this right here is like, what's the word for it? It's like intimidating. Price is already showing us, yo, I'm not coming in easy on you. I'm coming strong. Like the trend, yes, we didn't shift the trend yet. We still didn't have a change of character, but the trend is already showing us a strong signal that we're gonna shift. The internal trend is coming strong. Like what's gonna stop this trend from doing this? You know what I mean? That's why I don't wanna be in this fight. So that's why I would rather be in this rather than this. One small note about B setups though, I would recommend is this is actually very advanced. If you don't get it, it's okay. In the B setups, let's say we get a bearish no wick candle here. Only case I would avoid the B setup is if, let's say this is the 1-to-1, if my take profit is requesting that the external trend shifts as well, I would avoid this. So if me entering sells here is telling me, yo, that as a result, we need the external trend to shift, I prefer to stay away from these. Okay? So I would usually, this is like an ideal B setup. That's how an ideal B setup would look like for me. Boom. This is a bearish no wick candle. Like this. Price has to retrace back there. Cool. I would enter the sells here. I would have my stop loss at the most recent lower high, and I would have my take profit L1 to 1. This is alright with me. I'm cool with this. I can take the sells here, no problem. Why? Because even if the trend after a while decides, okay, we're not gonna break the trend, I'm chilling. Then this price might do this after. I don't care about this. But if the price was telling me, if the internal trend was telling me, okay, in return we need to break the external trend, something like this, and then let's say here we, okay, this would be a red flag for me. Why? Because for this to end up working out, let's say it was like this. For this to end up working out, we need to break the external trend. So we're asking for too much. We're asking the internal trend to do a lot. Like we're asking the trend to basically break the external trend in order to hit our take profit. This one has, I avoid them. This is not a B setup anymore. If the B setup is telling us, yo, break the external trend, avoid this at all cost, okay? Like try to avoid this at all cost. We don't wanna mess with the external trend. Because at the end of the day, the external trend is strong. You're basically asking a whole trend to reverse. Why would you do that? You know what I mean? So stay away from these ones, the ones that are like this. Sounds good? Let's do the other way around, a bearish. And don't worry guys, I'm explaining on the charts as well, so you don't feel confused. Because I know drawing here might get you a bit confused. So we're in a clear, and that's why it's important. If you didn't watch this whole video, you're not gonna be understanding what I'm talking about. But if you did watch them and take notes and all of this, you're definitely gonna understand what I'm talking about because I went through this in depth. So let's say when here, as you can see, we're in a clear external bearish trend, and then internal trend was bullish, right? In this case, I would enter the buys here, have my stop loss at the most recent higher low, and take profit 1 to 1. Cool, no problem. You see we have an internal uptrend, external downtrend. I'm chilling here. But if the price was like this, and then this bullish candle decided to show up here, for example, then in this case, I wouldn't want to take this one. Cool. In this case, I wouldn't want to be a part of this game. Why? Because although, yes, so we have an external bearish trend, internal bullish trend, and then we would enter buys here, stop loss would be at the most recent higher low, and take profit would be a 1 to 1. But for us, for this trade to hit take profit, we would need to break the external downtrend. That's something I don't want to mess with. You know what I mean? So that's why this I would highly recommend we stay away from this because we don't want to mess with the external trend. Got it? So that's something we don't want to play with. Now let's do a quick example on the charts. And this one has an 80% win rate. Let's see. I hope I find a good example. Amazing. never tapped though. I mean, with the Omar entry it did, but yeah. We can take this as a quick example. As you can see here, you know what? I'm gonna do this. Maybe it's gonna make it clearer for you. So here you can see we're in a clear bearish trend, right? Boom. We have a high, low, lower high, lower low, lower high, lower low, high, low, lower high, lower low, lower high, lower low. So when does this external trend end? When do we say, okay, this external trend shifted? Once we break this lower high here, right? So for this trend to be said, okay, we're not in a downtrend anymore, we're in an uptrend, we need to break this lower high. Okay, but as you can see, when you zoom in, I want my camera to be in the way. So this is the external trend. For it to shift, we need to break this lower high. Now here you can see we have a low, high, higher low, higher high. Oh shit, cool. Now we have an external downtrend and we have an internal uptrend. What do we do in this case? We are allowed to take buys, right? We see a bullish no wick candle and an internal bullish trend. Cool. What do we do in this case? We take the buys here, stop loss at the most recent high or low, or in this case here, stop loss at the most recent high or low and take profit 1-to-1. Got it? Clear? Or let's say even if it's here, same shit, 1-to-1. Clear? So you can see. Actually, let me draw it in a better way so you guys can see it. Off charts as well. So we have a high, low, lower high, lower low, lower high, lower low. And then we have high, low, high, and then the bullish no wick candle. Look. You see how the external trend looks like? High, low, lower high, lower low, lower high, lower low. So for the trend to shift, we need to break this part. But what happened is, we created a low, high, higher low, higher high inside, internal trend. And then the bullish no wick candle showed up here. Are we allowed to take the buys here? Yes, absolutely. You take the buys and you put your stop loss here and you put it 1-to-1. Got it? Now, before you guys start roasting me in the comments, I know this one didn't tap. Let me see something though. Oh yeah, I'll explain this. This is amazing setup, by the way, with the Omar entry. But you see what I mean? Like we have an internal uptrend, although the external trend is in a downtrend. And then a bullish no wick candle came, we could take this buys and hit take profit. I know we didn't tap it, but I'm gonna cover this in the absolutely like next part. Because you're gonna see this happening often, by the way, where price doesn't come to the no wick candle. And what do we do in this case? You get what I mean? Cool, now you know the C setup, now you know the B setup. B setup is my favorite by far, by the way, guys. I know it has lower win rate than the A setup, but it's my favorite. And now we gotta move to the A setup. The A setup, I don't like it. You know I don't like it? First thing first, it doesn't happen as often. To take the A setup, yes, the A setup does have 90% win rate, but when I trade, let's say, prop firms, I trade only A setups, by the way. But for the A setup to happen, it doesn't happen often. It happens like 2 to 3 times a week. So if you, or 3 times a week, it depends how many hours you're trading a day. That means you gotta show up every day to the market knowing that not every day you're gonna take a trade. If you have that psychology that makes you, okay, I just wanna take good setups, I wanna have a 90% win rate, but on the other hand, I'm not gonna be able to trade every day. If you can have that psychology, then cool, go for the A setup. If you can't manage that, you should move to the B and the C setup. Okay, because I know, I'm talking from experience, because my psychology allows me to do that. My psychology allows me to not take B and C, to take only A setups, although I would be taking only 2 to 3 trades a week. But my students couldn't do that. I tried with them, they couldn't. And you know, when I take A setups, risk a bit more because I know it has a higher chance of working than the other setups. So that's why I'm more confident taking these. Like let's say if on the C setup I risk 0.5%, on the, just an example, on the A setup I would risk 1% or 1.5%. You know what I mean? It's up to you how you want to manage your risk. But I'm just saying, like, if you have the psychology that allows you to take all the A setups, go for it. But just know it's not going to happen often. So basically, an A setup is a setup where the external and the internal trend align together. So if we have this, or if only the external trend is an uptrend and we don't have any problem. This one, for example, when a clear bullish trend, you see how we have a clear structure. Let's say a bullish candle shows up here. That would be an A setup. Why? Because price is going to continue. Tap here, tap the no-wick candle. You can enter the buys. Stop loss would be at the most recent higher low. And take profit would be 1-to-1. That's it. Or another example of the A setup would be this. Then you see how the external, although the external trend is an uptrend, the internal trend is also an uptrend. And then if you see a bullish no-wick candle here, you could also take the buys. And this would be a setup. Why? Because the whole trend is telling you, yo, price is just pushing up. You can take buys here. And you can have your stop loss at the internal trend and 1-to-1. Or you could have it at the external trend and 1-to-1. Got it? So that's it. That's basically the A setup. That's why I don't like it. And this one has the 90% win rate. It's just basically, you need to see a well-structured trend with a continuous change, breakout structure. Like you keep breaking the lows and the lows and the lows and the downtrend, and you're breaking the highs and the highs and the highs and the uptrend. Because there's always a higher chance to continue the trend than reverse the trend. As simple as it is. So something like this, boom. I would wait for price to retrace with the no-wick candle. I'll put my stop loss at the most recent lower high. And I would have my take profit at 1-to-1, and that's it. Because I know once price comes here, creates the new lower high, it's gonna go and create the new lower low based on how the movement been happening for the past. Depends what it is. This is not a good A setup. You see, this is a C setup. We change the trend and then we push the price. But let's see. This is a good, amazing A setup. Perfect A setup. You see, when a clear bearish trend externally and internally, we never had a change of character. We're just continuing the trend downwards. And then a bearish no-wick candle showed up. I would take the sells here, I'd have my stop loss at the most recent lower high, and I'll have my take profit at 1-to-1. And that's it. And you can see with the A setup, you don't even need to go to 1-to-1. You could, this trade you could have made 1-to-5. I'm not saying you should, but I'm just saying what happened. You get what I mean? This is a good A setup. You see when a clear bullish trend, low, high, higher, low, higher, high, higher, low, higher, high, clear bullish trend. I would enter the buys here, stop loss at the most recent higher low, and take profit 1-to-1. This is a clear, good A setup. As you can see, when a clear bullish trend, bullish no-wick candle showed up with no bottom wick, I would enter the buys here, stop loss at the most recent higher low, and take profit at 1-to-1. That's it. That's literally it, guys. This is a good A setup. When a clear bearish trend, a bearish no-wick candle showed up with no top wick, I wait for price to retrace it back there, enters the sells, stop loss at the most recent lower high, and take profit 1-to-1. You see, like that, you can tell already that the trend was the trend is predictable here. You know what's gonna happen after. So yeah, that's it pretty much. That's the A setup, which has a 90%. The B setup, maybe I should like quickly sum it up. A setup, structured trend, and clean market structure. B setup, internal trend is against the external trend. C setup is when we have a no wick candle directly after a change of character. 90% win rate, 80% win rate, 70% win rate. Cool? Goddamn, now you guys know a lot actually. Now you know, like if you understood what I've been talking about for the last hour and a half, you know a lot about me, like about my strategy. You know absolutely a lot. Oof, I got tired, not gonna lie, 1 hour and a half talking. All right, so after this, now we're gonna talk about the Omar entry. And basically the Omar entry is when some cases, I take the trade before it even taps the no wick candle. You get what I mean? So I'm gonna just go eat, take a bit of rest because I feel like my throat is dry now. Pause. But I gotta go take a rest and then I'm gonna continue and we're gonna move to the Omar entry. In the meantime, I'm also think if I forgot any detail or if there's something I gotta go more in depth about, and I'm gonna come back to y'all. All right, see you soon. All right. So welcome back. I was supposed to go eat and come back, but I ended up going, eating, sleeping, sat down with bit with my dad, had some family time. We went some side quests. We went out, and we watched movie. So we did just some random stuff. So yeah, I was supposed to go and record after it, but I never did. I ended up coming here, so it's all right. Now it's a new day for me. So I mean, why am I even telling you this? You don't care about this, guys. I know, but it's okay. It's not a big issue. Now, I remember last time I promised you that now I'm gonna talk about the Omar entry. But one of my students asked me a really good question, which is a question I should have included in the course, but I didn't. And now when he asked me the question, I was like, oh shit, I didn't talk about this in the course. So of course I explained to him, and I'm explaining to you guys as well. So it's a pretty simple thing. So I'm gonna explain this concept, and then we can move to the Omar entry. Basically, the Omar entry is when price doesn't tap the no wick. Sometimes I enter earlier. So when is that? When do I do this, and how do I do it? So before we do that, and I also updated the rules based off that, like I made it more specific so you can take a better screenshot of the rules. Anyway, I'm gonna skip the yapping, I'm gonna jump straight to the explanation. I don't wanna yap too much, because I know you guys hate when I yap too much. So anyway, let's lock in. I'm gonna use this example for both Omar entry and what I'm explaining now. So that's a good thing. My student's question, he sent me this and he was like, okay, Omar, so we're in a bullish trend, we enter buys at the no wick candle, but because we're in an uptrend, but what do we do when we see a bearish no wick candle against us in this case? Like if we're in an uptrend, we're in buys, and then a no wick candle shows up against us, what do we do in this case? Do we move stop loss to break even? Do we cut loss? Do we close and profit in this case? What do we do? So I'm gonna explain it to you fully in depth, okay? So let's say in this case we're in an external uptrend, we see a bullish no wick candle, we enter buys, stop loss at the most recent higher low, and take profit 1-to-1. You should know this by now. Now, let's say while we're doing this, price was low, and then for some reason a bearish no wick candle comes against us, like the example I showed you, which I'm going to show you again on the charts. What do we do in this case? Do we move stop loss to break even? Do we say, okay, my profit's going to be here? Do we say, what do we do? You know, if this was in drawdown, what do we do in that case? So I'm going to talk about it now. Look, in general, if you're in buys or if you're in sells, and then a no wick comes against you, it's not a good sign, okay? But it's not a terrible sign either. Does this mean that the chance of the trade working out is less? Yes, because after we tap this no wick, in this case, because we're in a bullish trend externally and we're in a bullish trend internally and we entered buys, everything is perfect, and then this bearish candle showed up with no top wick, price could reject and hit stop loss. Is there a chance of this? Definitely. Did it happen to me in the past where price reject exactly at the no wick? Yes. Now you're gonna be like, okay, but Omar, we're in a bullish trend. Why would this no wick candle work? Well, it just happens sometimes. It's part of the game, right? Now, what do Omar do in this case? Now, first thing, I have some students, once they see a no wick candle against them, they always move stop loss to break even. Is it a bad idea? No. But because they want to have a high win rate, they always want to have a 90% win rate. So they would just play it safe and move stop loss to break even. But you're wondering, what does Omar do? Because I told you, this lowers the win rate, but not by like a huge amount, because this no wick is still stronger than this no wick. So what does Omar do? Well, it depends. If I see, okay, we're still in a bullish structure, in this case, I wouldn't care about this no wick, because in my head, the probability of the bullish no wick candle would be higher than the bearish no wick candle. Why? Because let's say they have the same power, the bullish candle and the bearish candle in this case have the same power, but we also have the trend with us. So this means most probably this no wick will end up beating this no wick, because this no wick has a trend with it. This no wick has nothing, it's just a no wick candle. So what do I do? I just let it run. Either it's gonna hit take profit or it's gonna hit stop loss. Same concept for the bearish example. Let's say we're in a bearish trend. We get a bearish no wick candle. Price retrace to the bearish no wick candle. We would enter sells here. You should already know this by now, guys, please. I hope so, at least. Boom. Now, price might do something like this after we tap the no wick candle. Price might come down, and before we hit take profit, we get a bullish no wick candle against us. Now, what would my students, some of them, they put stop loss to break even because they want to play it safe. Because as I said earlier, this would definitely lower the win rate. Would it like lower it from 90 to 60? No, but we'll still have a chance that price would reject here. Some of my students, if they see they're in profit, they would just, be like, okay, it's better that I get 0.8% than nothing. You know what I mean? Me personally, I'm a greedy guy sometimes. Nah, I'm playing. But what I would do is I wouldn't be scared of this. Like, I don't care about this. I wouldn't do anything about it. Either I'm gonna hit take profit or I'm gonna hit stop loss. So I don't care. But there is one case where I would, like, this is non-negotiable, okay? This one case you have to move stop loss to break even, which is, let's do it here first and then we're gonna do it on the second example. This case you have to move stop loss to break even if you don't want to. This one doesn't happen often, but I'm telling you about this so you don't ask me about it later. If you see, okay, the trend is shifting, like here, we have a high, low, lower high, lower low. Let's say we also get another lower high, lower low. Now, this one would have a higher chance of working than this one. Why? Because the trend shifted already. Now we're in a downtrend. So this one has a higher chance of winning over this one. So what would I do in this case? In this case, I would close here. Once price comes back to the no wick candle, I would wait for price to retrace. And then here, I would cut loss. I would say, okay, I don't want to lose more. This is basic price action. I would be like, okay, I don't want to lose more. And I would enter the sells in this case. And then I would put stop loss at the lower high and one-to-one take profit. Got it? Let's do another example here. If, let's say, the trend starts doing something like this, then we get a bullish no wick candle, and then here I'm like, okay, we're in a bullish trend now. I would cut loss once we tap the no wick candle, and then that's when I would enter. Like, once price comes back to the no wick candle, I would cut loss or take profit, whatever it is, if we're in drawdown, or like I would just close the position regardless if we're in profit or if we're in drawdown. And then I would switch the position. I would enter the buys here, stop loss at the most recent higher low, and take profit one-to-one. Sounds good? It should be easy, should be pretty straightforward. It shouldn't be, you shouldn't overthink this. It's just basic price action. So for me, the way I see it is, okay, the no wick that is against us, is it with the trend or not? If it's with the trend, that means it's a valid no wick. That means it's a valid no wick. If it's a valid no wick here, I would be cautious. I'd be like, okay, let me cut loss or take the profit. Let me just close the position and enter the no wick, which is against us. If it's not a valid one, then I don't care about it too much. Now it's up to you guys. You have two options, as I said. Either you want to be cheap, and then you would be scared of these, and then you close every time you see a NOIC against us, or move stop loss. Like, it's up to you. It's literally up to you, because there is a lot of stuff you could do about this. Like, there is cases where it's going to be like this. Then you enter the sells once price comes back. Let's say this is the one-to-one, just to make, so you can visualize it better. Boom. And then price is going down. And then a bullish NOIC candle will show up against us. Once price taps this NOIC, you could be like, okay, cool. In this case, I'm already in profit. I'm gonna close this trade in profit, maybe 0.5, 0.6, 0.7 RR. That's an option. So you have option one. Close either ways. Once we tap a NOIC candle. Now, if you do this, so option one, close either ways once we tap the NOIC candle, profit or drawdown. Because don't forget, this could happen like this, or it could happen like this, where we're in drawdown and this happens. Like, you could be in drawdown and then you tap the NOIC candle. You know what I mean? So that's also an option. So that's something you could do. Close every time. Or it could be in profit. Option number two, move SL or TP to break even. So if you're in profit, like this case, you would just move stop loss to break even. And then if this case happened, because it's not always gonna look like this. Sometimes this could happen. Let's say you're in drawdown, and then here, that's when the NOIC candle shows up. It could happen to you in drawdown, let's say like this. Boom. Like, you're in drawdown, here you got option one, you close in drawdown, or in this case, some people prefer to close at break even. So if price comes back to break even, they close. Or option three, only take a decision, between parentheses, closing the trade if it was a valid NOIC. It's up to you which one you choose. Option three is a bit advanced, not gonna lie to you. That's why, like, usually I give people option one or option two, but if you're an advanced trader, you could choose option three, which is only take a decision, closing the trade if it was a valid NOIC. So let's say in this case, it was something like this. Let's just make it like better, okay? And then, let's say in this case, a bullish NOIC candle comes, although we're in the sells here, then in this case, I would take a decision. I have to here, like option three is non-negotiable, because now this one is valid and this one is not valid because we're already in an uptrend. So once the price taps the NOIC, I would close this trade with, let's say, I don't know, 0.2, 0.3, 0.5 loss, and then I would enter the buys, and I would still risk the same amount. And then if this hits take profit, I would end up making more than I lost. You know what I mean? So it's all up to you. To sum it up quickly, option number one, close either ways once we tap the NOIC candle, profit or drawdown. So if you enter buys, let's say, or let's do the sells. If you enter sells, quickly. If the trend is like this, that's for option number one. Bearish NOIC candle shows up, you enter the sells, and then if a bullish candle shows up against you, you would close the trade regardless if you're in profit, or if the bullish candle shows up, let's say while you're in a drawdown, you would close in loss. That's an option you could use. Option number two is move stop loss to break even. So if once you see the NOIC against you, Once price taps that, you just move stop loss to break even to be safe, or if you are in a drawdown when this happens, let's say the no against us came while we're in drawdown, you're like, alright, either I'm gonna hit stop loss or I'm gonna get out at break even. And then third option, option 3 is non-negotiable. If you were in, which is this one, if you were in sells and then the trend internally shifts, for example, like say it was like this, that would be a good example. Like this is a real life example. Like that's something that would happen. If you're in a trade like this, you enter sells, let's say, and then we create an internal uptrend, and then we create also a bullish no-wick candle against us. In this case, once price taps the no-wick candle, you have to, it's a must, like it's not optional. You would have to close the trade here, which would be like 0.5 loss, 0.5% loss, and then you would enter the buys and put stop loss at the most recent high low and take profit 1-to-1. Sounds good? Because now when you look at this alone, forget that you entered this trade. If you came here and this wasn't here, like I'm gonna explain to you the psychology behind option 3. If you came here and you saw this no-wick candle, you would enter the buys here regardless. So why just because there is a bearish no-wick candle here, you're getting scared of it? Like why now you don't want to take it? Just because you're in a position? Doesn't make sense, right? So choose whichever option you want. Option 3 you have to do regardless, like if you want to or if you don't want to. If the no-wick candle against us is valid, then you have to leave the trade. Like even if you don't want to, you have to. With a profit or with a drawdown. Otherwise, if you want, but this, just know option 3 has the lowest win rate. But if you want to be like on the safe side, you can use either option 1 or option 2. I'm gonna leave it up to you. I'm not gonna control it. Option 1 and option 2, does this no-wick candle against us lower the win rate? Yes. Does it dramatically change it? No. Do I do it? No. Do my students do it? Some of them do. What would I usually recommend once they actually understand the system and they become like, because this is advanced concept and it requires like you to be not emotional and take the decision. So if you can do that, then option 3 is definitely the best. Okay. If you still want to have high win rate, then I would recommend option 1. If you want the highest win rate, then option 1. But at the same time, don't forget, yes, you will have higher win rate with option 1. Only issue with option 1 would be you would end, oh sorry, not option 1, option 2. Option 2 has the highest win rate because you'll end up closing more trades at break even. But the only problem with it is you'll end up closing more trades at break even. So yes, you will protect yourself. So let's say this shit happens 10 times and then 10 times you move stop loss to break even. Cool. You will end up having the highest win rate. But from these 10 trades, 7 of them, let's say, would have worked out and hit take profit instead of stop loss. So you would have missed on 7 winning trades just to protect yourself from 3 losses. You get what I mean? So in the long term, I don't think option 2 is the best. But I know some of my students do it, so that's why I'm not judging. I don't want to hate on them. They're profitable, so I can't talk shit about them. Now let's see a real life example. This is gonna clear shit up. Let's see here. I know it didn't tap the no-wick, but that's because I'm explaining Omar entry. Let's say we're in a clear bullish trend. You know what I'm gonna do? Oh, I can't. Oh yeah, I can. So let's say the trade looks like this. We're in a clear bullish trend. And then a bullish no-wick candle showed up. Cool. We enter buys, stop loss at the most recent higher low. All right? In this case, we enter buys, stop loss at the most recent higher low. Oh, yeah, with the Omar entry, let's say we entered this with the Omar entry, which I'm explaining directly after this, and then we enter buys. Stop loss at the most recent high low as usual, and we're chilling right now. And then, boom, a no-wick candle shows up against us. Now, here you have 3 options. Okay, cool. Here we have 3 options. Let me bring the options so you know exactly what I mean. Where did I put these options? And guys, it doesn't matter which option you choose, as long as you keep doing whatever you choose consistently. Like, I don't want to see you one time doing this and one time doing that, because that's how you kill the edge of the strategy. As long as you keep doing the same thing over and over, then you're chilling. So look, we entered the buys here at this no wick, and then another no wick came against us. Now, here you have 3 options. Option 1, close either ways. Once we tap a no wick candle, profit or drawdown. This case, it's a profit. So some of my students would do this, and they'd be like, okay, I have 0.55% secured in my bag. I'm chilling. I don't want more. It's okay. If it ends up hitting TP, I don't care. If it ends up hitting stop loss, I don't care. Then you have option 2, move stop loss to break even, which is this. Now, either we hit take profit. So best case would be we hit take profit, and worst case would be we hit stop loss. We hit break even. So in this case, best case, we hit take profit. Worst case, we hit break even. And then you have option 3, only take a decision, closing the trade if it was a valid no wick. Now let's look at it. Is it a valid no wick? Is this a valid no wick? No. Why? Because we're still in an uptrend. Now if this, let's say, if price made a downtrend first, and then the no wick candle came, that would be another story. That's when we move to option number 3. But in this case, we're chilling because we're still in an uptrend. So in this case, what would Omar do? I will just leave it like this because I'm not scared of this. I know most probably this would not work. You know what I mean? So price after did this. And yeah, we hit take profit, you see? Now, if you chose the option of break even, you would have been chilling. Like, I generally don't like option 1. I like option 2 or option 3 because it keeps the psychology the best. So if you chose option 1, you would have ended up winning the least. You would have ended up winning only 0.54% of what, or 0.54 R of what you would have risked. Option number 2, you would have moved stop loss to break even. This one you would have the highest win rate because now in this case either you're gonna hit take profit or break even, but there will be a lot of times where you're gonna hit break even. So which is annoying because after we tap this no wick, here, price could have literally just done this after, and then this. You see what I mean? So that's something also you gotta take into consideration. And then you have option 3, which is only take a decision closing the trade if it was a valid no wick. Was it a valid no wick? No, it was not a valid no wick. Then I'm chilling. Okay, cool. I'm not gonna go over this again. It's not very complicated. Please don't complicate it. And please, if you have a question about it, rewatch this first. And then if you still don't get it, ask me questions. Cool. And then yeah, this no wick came. Same concept. We're in an uptrend. I would enter buys, stop loss in the most recent higher low, and yeah, with it take profit. Ooh, let's see here what would happen. You see, like, let's say, just for instance, take profit was here. Let's say. You see, this no wick candle, both of them came and they didn't scare us. You get what I'm, or you know what I mean? Yeah, it would have been. I can't make it a realistic example. I could try to find a realistic one. Oh my God, this is a perfect one. This is a good one. This one, this bullish example. So we were in a clear downtrend previously. And then here we broke the structure. This is the C setup, guys. Remember the C setup? And then we got a bullish no wick candle. Cool. I would enter the buys here, stop loss at the lows, and take profit 1-to-1. Ah, yeah. We had take profit before that. Fuck. The thing is, with such a good strategy, like these are, by the way, 1 in a 10 or 1 in a 20. cases. Like this doesn't happen often, but you guys get creative with the question somehow. But you see, like I would enter the buys and then would hit take profit. Now, now you can see already here, price rejected from this no wick candle. So I think it's not going to be realistic because let's say the TP was like this just for the sake of it. If you chose option number 1, closing at take profit, you would close with less profit. If you choose option 2, you would be safe, and then in this case you would have hit break even. And then option 3, you wouldn't do anything. Why? Because it's still not valid. So I would be chilling. You know what I mean? So yeah, that's it pretty much. I want to find a really good example to explain it like properly. Yeah, same thing here, but here we hit take profit. Perfect. Perfect, perfect. Perfect example. God damn it, perfect example. Perfect example. Look. Oh my God, perfect example. Like it's so good that I'm gonna explain this in depth because this is gonna explain everything. I know this shouldn't be taking this long, but that's the thing. Usually when I'm talking to my students, I ask them, yo, did you get it? And then he would say yes or no. If he said no, I would repeat it. But with you guys, I don't know if you understood what I mean or not. That's why I have to go over it again and again because I want to make sure that you guys understand. So as you can see here, we're in a clear bullish trend. This is a C setup as well because we're in a downtrend before, then we broke structure and now we're in an uptrend. So I would enter buys, stop loss would be at the lows and take profit would be 1-to-1. Okay? Perfect. Now here, when we saw this no wick candle against us, if you chose option number 1, in this case you would have made 0. Let's say you would have made 0.1 R. So basically almost break even. If you choose option number 2, moving stop loss to break even, then you would have made 0 money. Why? Because you would have got stopped out or break even. If you chose option number 3 and you look at it, okay, this is not a threat to me, we're still in a bullish trend, you would have ended up hitting take profit. Now, does this lower the win rate? Definitely. But will it be worth it in the long run? Yes, because sometimes it's not always having a high win rate is good. Sometimes even if you can have, because think about it like this. What's the benefit of having 100% win rate, which is impossible, but let's say what's the benefit of having 100% win rate if you can only take 10 trades a year? You get, or 95% win rate if you only take 10 trades a year. I would rather have 80% win rate and take 100 trades a year. You see what I mean? Because then I would make way more money. Does that make sense? Because I don't want to get, because this would make me furious. If I got stopped out here at break even, this would just like piss me off because look what happened after. You know what I mean? Another perfect example. Oh my God. Perfect example. I have to go back. As you can see, we're in a clear bullish trend, and then like we got a low, high, higher low, higher high. All right. And then what's the stop loss on this one? So it's 13.3, so that would be 14.3. Let's say 15 pips with that breathing room, the one we talked about earlier. And that's actually one of the reasons why breathing room is so important. You're gonna see it now. You see why breathing room is so important? Because if you had it perfectly here, you would have been stopped out. But with the breathing room, you're chilling. Because we don't want to be liquidity grab. So here we're chilling. We're in buys. Okay, cool. Nothing wrong here. We're chilling. We're chilling. We're chilling. We're chilling. We're still chilling. God damn it. Perfect. Yeah, that's 1-to-1 here. Perfect. So we didn't hit take profit in this case, okay? Now, bearish no wick candle came against us. What do we do? Let's see. We're still not going to take any decision until we tap it. Perfect. Now we tap the no wick candle. Now, you have option number 1. Closing full once we tap the no wick candle. So that would be, you would make 0.47 RR on this only. Now, if you choose option number 1. If you chose option number 2, moving stop loss to break even, you would have hit take profit as well. And if you chose option number 3, you would look at it, okay, is it a threat? Would I enter sells in this case? Let's see. No, we're still in an uptrend. Why would I enter sells? Then you would also have hit take profit. So that's what I'm telling you. Option 1, stay away from it. I'm not gonna mention my student's name who came up with option 1's idea, but that guy, I gotta give him a call soon. Like, yo, don't, like, it's not a good idea. But you see, if you chose option 2, stop loss to break even, you would have still hit take profit. If you chose option number 3, you would also still have to take profit. But just know that in a lot of cases, option 2 will save you from losses, but at the same time, it's gonna make you miss out on many wins. As I said, out of 10 trades, it's probably gonna save you from 3 losses, but at the cost of missing out on 7 wins. So it's not worth it. But it's also up to you. If you feel like, okay, having a high win rate is the priority, then stop loss to break even here is very important. Let's see, how long have I been recording for? Oh, 30 minutes on this is crazy. This didn't need 30 minutes. Yeah, this definitely didn't need. Oh, perfect. I mean, I wouldn't take this trade, by the way. But I'm just saying, let's say if I took this trade and I had my stop loss somewhere here, and then I had it 1-to-1. Okay, let's say I had my stop loss here and take profit 1-to-1. The thing is, the strategy is too OP that I gotta fake losing to lose. So if that was the case and I enter sells here, you would see what I mean. A bullish no wick, like we enter sells, a bullish no wick candle showed us against us. Let's say if you choose option number 1, in this case you would have made 0.3. Ideally, okay, you made 0.3. If you would choose option number 2, once we tap the no wick candle, you would move stop loss to break even, and then look what would have happened. You've been stopped out at break even, and then if you're like me, you would choose option 3, you would end up hitting take profit. So I guess everything has its own consequences. We gotta just live with it. Cool. Cool. Oh yeah, these are the rules. We're gonna come back to them, but let's just cover the Omar Nowick for Omar entry first. Damn, did I just mention my name? That's a bit zesty, not gonna lie. Mentioning my name is crazy. I mean, it's not my real name, so who cares? Cool. Now, that's it pretty much for no wick against us. Now we're gonna move to the Omar entry. Let me just take a sip of water first. And now we can talk properly. All right, so let's chart out on the sides. Oh, I gotta delete a lot of, I'm gonna delete, like, how much did I draw? 150, crazy. All right. So, Omar entry. Sometimes I call it early entry, sometimes I call it pre-entry, it depends, but I'll mostly call it Omar entry. So, this is how this shit works. Especially for the ones who've been backtesting the strategy, for the ones who've been trading the strategy will know this more. But for the new ones, you still haven't experienced it. And lucky you, because the ones who did, they're probably going through hell for not knowing Omar entry. Omar entry is very interesting though. And this is actually the last, let me see, I think this is the last concept. No wick against us. Yeah, almost the last concept. And there's one more thing I've got to talk about and then we're done. So this is the Omar entry. Sometimes, let's say it's like this, and the Omar entry happens most of the time on USD JPY. It happens on USD JPY more than GBP USD and more than AUD USD. But anyway, let's say we're in a bullish trend. You put your buy limits here. you put your stop loss at the most recent higher low, and you put your take profit at 1-to-1, like usual. Now, you're gonna see this happening around 60% of the time. No, sorry, 40% of the time. 60% of the time this doesn't happen. Price would come back to the no wick, and right before we tap the no wick, price would reject and hit take profit. Something like this. And this used to piss me off because this didn't happen to me 1 time, 2 times, 3 times. It happened to me it happened to me a lot of times where I reach a point where it started to piss me off. Because when it happens to you 1 time, 2 times, 3 times, you're cool with it. But once it happens too much, you're like, okay, we gotta find a solution for this. So what I found out is 40% of the time, price would come very close to the no wick, but never tap it, and then end up rejecting and hitting take profit. So here, I was like, okay, cool. I backtested this and I realized this happens 40% of the time. So I was like, okay, what should I do? Then I was like, okay, cool. What if I just raise my entry a bit? Even if we don't have the no wick, I'm still chilling. Like, that's how I would enter earlier. Now you'd be like, oh, that's smart. But how early would you enter? Because sometimes price is gonna come this close, sometimes price is gonna come this close, sometimes this close, sometimes this close, and sometimes it's gonna tap it. So how do you know how much early are you gonna enter before tapping the no wick? Well, this is easy. I'm gonna explain to you how, like, the price action behind it. Okay, so this I'm gonna divide it into 2, advanced and simple. Okay, I'm gonna start with the advanced and then I'm gonna tell you the simple. If you've been a trader for a while, then use the advanced. If you're a new trader, I made a rule for you on how to use the Omar entry. Cool? So, why does price sometimes reject before the no wick candle? For many reasons. Many reasons. Something as simple as there is a support before the no wick or a resistance. Something as simple as there is a fair value gap before the entry. Something as simple as, let's say there's the fair value gap, once price comes, it's gonna tap and then it's gonna reject, so you're not gonna end up tapping the no wick. Something as simple as, I don't know, a trend line, for example. There might be some, oh, it's aligned perfectly. Something like this. There might be a trend line, price is gonna come, tap, once it taps the trend line, it's gonna bounce from there. So it's never gonna end up tapping the no wick. So with you knowing this knowledge, you could just enter before the no wick candle. So you're on the safe side. Now, of course, just because you want to enter before doesn't mean price has to reject there. No, price could still tap the no wick and then end up hitting to your take profit. So not an issue. So yeah, that's how I came up with the Omar entry. So you use basically extra confluences to detect if you should enter earlier or not. But this is very important. You do this Omar entry in specific scenarios. And that's where, like, if you can, guys, know this based on price action, amazing. If you can't, not an issue. Even me, now I'm an advanced trader and I still don't use the advanced strategy all on the Omar entry. I still use the basic entry because it just brings me, how do you call it, peace to my mind. I don't need to think about it too much because if you see my charts, I never draw anything, like literally nothing. I literally draw nothing. I just market the structure and that's it. So I don't need to draw anything because I don't want to overthink trading. I want to keep the strategy simple. So what do? I made a rule because I started increasing a bit and a bit and a bit and a bit. And then I realized I reached a point where I'm entering very early before the no wick. So basically I ruined the whole system. So I came with a rule which says only and only if, and this is for the Forex pairs, by the way, just for these 3 pairs, only and only if if stop loss, this one, if your stop loss is more than 15 pips, as you can see here, boom. If it's more than 15 pips, in this case, you can enter an Omar entry. So if it's less than 15 pips, no Omar entry. 15 pips and more, Omar entry. Okay? And how do you do this? Once it's 15 pips or more, you would just enter 2 pips earlier. That's it. That's literally it. And then you make it 1-to-1, of course. Cool? Let's do the bearish example, because this is very simple stuff. This is the bearish example. Boom. Let's say price retraces the no wick. You would enter sells. Stop loss would be at the most recent lower high and take profit 1-to-1. Now, I would look at it like this. Okay, cool. Or sorry, before retracing. Like that's when the candle closes. I would look at it, okay, is it more than 15 pips? Yes, it's more than 15 pips. Nice. Or my entry would be here. Now, in this case, it's 18 pips. In this case, and now I make it 1-to-1. So everything like normal. It's 18 pips, cool. What do? I increase the stop loss by 2 pips. So, not increase the stop loss by 2 pips. I adjust my entry by 2 pips. So I enter 2 pips earlier. 2 pips, so I put my limit, sell limit or buy limit, 2 pips before tapping the no wick. So in this case, if it's 18, I would make it 20. So I would just lower my entry 2 pips. If you don't want to do it this way, you could just bring a ruler and measure 2 pips like this. Okay, and then you can adjust it until it's there. And now price might do this. Come back to the no wick, tap it, and then, oh yeah, I forget. And then I make my take profit 1-to-1. And then price might tap it and then go to take profit. Cool. Very easy, very simple. Should I explain the psychology why I made it like this specifically? Because I know you might see it as random numbers now if you're advanced. But I'm gonna tell you, actually, you know what? I must explain to you how I came up with this and why did I come up with this. So the reason why I came up with the Omar entry in the first place is like this way specifically, because you might be wondering, okay, but why only above 15 pips? This doesn't make sense. If price is gonna reject before, it's either way it's gonna reject before. Why exactly at 15 pips? I'm gonna tell you. Because okay. Now, let's say your stop loss, you know what, let's delete this. And let's delete everything. I just wasted 30 seconds of your life. Let's say the stop loss was 5 pips, like this. And then it's 1-to-1. Okay? If you would enter 2 pips early on this case, and I realized price would come close to the no wick 2 pips most of the time, 1 to 2 pips. So that's why I made the hard rule of 2 pips. If price won't, let's say in this case, would come down to tap the no wick. If you want to enter 2 pips early on this one, so you make your stop loss 7 pips, look what happened now. Look what happened to the risk to reward. It dropped from 1-to-1 to 0.5. And then you would extend it to make it 1-to-1. This way you basically increased how much the move is supposed to give you. Because when it was at 5 pips stop loss, and then that's the 1-to-1, price was supposed to only, or the no wick is supposed to give you only this much. But when you increase it to 7 pips, or like when you raise your entry, say 2 pips, now the 1-to-1 is all the way up here. So I realized sometimes, or most of the time, or a lot of the times, price would come, tap the early no wick candle with an Omar entry, end up pushing too much up, but it will never tap your TP. And after that, it's gonna reject and hit your stop loss. And I couldn't blame the no wick. Why? Because technically the no wick did give me the 1-to-1. Because from the higher low or from the lower high, it did give me the 1-to-1. But it still didn't give me the move I'm looking for. Like, it still didn't hit my take profit. Like, it was short. Like, either ways, it still didn't hit my take profit. I don't care if it did the move, if it did its job or not. It still didn't hit my take profit. But on the other hand, when stop loss is 20 pips, for example, like you see how much you increased it, by the way. When it's 5 pips, the move you increased it wasn't too much. You only increased it by, sorry, when it was 5 pips, you increased the move too much. Like from 5 to 7 pips, I know it's only 2 pips difference, but you increase the RR from 0.5 to 1 to 1, which is crazy, like it's a lot. But on the other hand, when your stop loss, let's say, is 20 pips, and let's say price is going to come back, tap the no wick, and then go to take profit, okay? By the way, this is not important. I'm just explaining to you in case you're curious why I came up with the system. Like, I'm going to explain later, one sec. So let's say it's 20, so you want to enter 2 pips earlier, 21, 22. Boom. You see, it went from 1 to 1 to 0.8. So now you're not requesting the move to be increased by much, because from 0.8 RR to 1 is rarely going to have any effect. But when it's from 0.5 to 1, you're asking for too much. Because I don't want to see this price coming close to take profit, hitting the original take profit, and then ending up hitting stop loss. You know what I mean? So that's the whole psychology behind. That's the whole psychology behind the Omar entry. Now, should you care about all of this yapping I did right here? No, not really. All you need to care about is this. If stop loss is more than 15 pips on Forex pairs, then enter Omar entry. If stop loss less than 15 pips, enter normal entry. If you are an advanced trader, I hope you're taking screenshots of these stuff that I'm writing, by the way. Like the option 1, option 2, option 3 earlier. If you're an advanced trader and you know how to read price action, you can read when to use Omar entry and when not to. Cool? So that's all you need to care. If stop loss is more than 15 pips on Forex pairs, enter Omar entry. If stop loss is less than 15 pips, enter normal entry. If you're an advanced trader and you know how to read price action, you can read when to use Omar entry and when not to. Now, how important is Omar entry? Not so important. Can you skip it? Yes. If you didn't understand it, rewatch this part. If you still don't get it, that's all right. Don't stress about it. I just wanted to clarify it because some of y'all, when I take the Omar entry on trade recaps, y'all be hitting me with like, yo, what is this price in? Tap the no wick. Why you lying to us? But I mean, I can't blame you guys because I never explained this concept before, but now you know. So now you know when I enter an Omar entry, why I'm entering an Omar entry. Now let's have a quick look at a real chart example. Of an Omar entry. I marked one out. Yeah, perfect. So, even if you had your stop loss here, because technically this is the higher low, I just had it bigger because I wanted to explain something, earlier about the no wick against us. So, boom, 13.5 with a breathing room that would be around 15 pips. So cool. Now in this case, look at it. Stop loss is 15 pips with a breathing room. Can I enter an Omar entry? Yes. Okay, so how would I enter an Omar entry? I would simply raise my entry by 2 pips. So my buy limit, instead of being here, it would be here. 16, 17. Boom. So almost immediately once the candle closes. And then I would push my take profit to 1 to 1. Yeah, that's it. Boom. Price, now we in. Because you see price came, tapped the Omar entry. And boom, we won. Now, in this case, if you would have waited for this entry, the trade is not valid anymore because you see price came close, tap, take profit, and price never actually came back and tapped it again. So that's the crazy part. Now, just so you know, there's one consequence of using the Omar entry, which is sometimes the normal entry would end up hitting take profit, but the Omar entry will not. Because automatically, like look, the 1-to-1 on the normal entry would be somewhere here. This is the entry, the normal take profit. So price might reach this point, but not reach this point. You get what I mean? But that's just part of the game. It's a probability game. I've backtested this over the years, and I've realized Omar entry just works amazing, you know. This is an example of an, oh yeah, but it wasn't a valid trade. But this would be an example of an Omar entry. You see, price never really tapped the no-wick. Let me delete this. Price never really tapped the no-wick candle. So you wouldn't have been able to enter this. With an Omar, no, an Omar entry wouldn't be valid here either ways. You see, here's a better example. If you would have wanted to take this sell is not valid, by the way. More than 10 candles. Price already made the structure. Oh my God, this is perfect. This is not valid because you see, guys, price already made the structure, because I was searching for an example last time, but I couldn't find one. We're in a downtrend, price made the structure. Then here we shifted the trend from a downtrend to an uptrend. So even if price taps this no-wick, it wouldn't be valid because now we're in an uptrend. We broke this lower high. But let me see if I can find the Omar entry. Would this be an Omar entry? No, that's 11 pips, too much. You see, this would be an Omar entry. Let's see if this is an Omar entry. 6 pips. Nope. I would have missed that too. Even Omar would miss this. God damn, why is... Oh, it's because we're on GU, not on UJ. On UJ, you'll see them more. I swear they happen often on GU as well. Okay, let's see on UJ. I want to find one with y'all, you know, so I can sleep good that night. God damn it, man. Why can't I find an Omar entry no more? Alright, I'm gonna search for 1 more minute. Finally, bro. 2 hours later. Yeah, but it's because I told you earlier, it happens mostly on UJ, more than GU. You see, here we're in a clear uptrend. This wouldn't be a higher low yet because we still didn't break the highs. So this would be a C setup. We have a low. I mean, it's a low key, an A setup as well. We have a low, high, higher low, higher high. And then we got this no-wick candle. So without an Omar entry, you would have your entry here, stop loss here, and take profit 1-to-1. And then you wouldn't be able to take this trade. But then, okay, I would look at it. It's 29 pips instead, so it's more than 15 pips. Can I take an Omar entry? Yes, I can. Okay, 29, so it will be 31. So I can enter 2 pips earlier. 30, 31, perfect. And you see, and then I would extend it, of course, to 1-to-1. And here you go. Omar entry for the win. So only with an Omar entry, you would have got the win. Without it, you wouldn't have got the win. This, I told you guys, or it happens more on UJ than GU. Like, it's very, I know this, it's more common on UJ than GU. So yeah, that's it pretty much. Oh, that's another one. Was this more than 15? I don't think so. No, that was 7. don't want to waste your time. I mean, we found one. Okay, it's all right. You got the point. I hope so. You got the point, guys. I don't want to waste your time. I don't want to make the video 6 hours long. I mean, it's already probably at 5. I haven't seen how long it is, but I know it's a very long video. But I hope you guys are getting value at least. All right. So before we move to the last section, I just want to give you the rules again, because this is basically it for the strategy. Like strategy-wise, this is it. You know now almost everything. I just want to give you all a motivational speech. No, I'm playing. I want to tell you how you can customize the strategies to yourself and what to be expecting when you backtest and all of this. But before we do so, here's the rules. Perfect. So rules that make the no-wick valid. Okay, now I need you to lock in. So let me see. This section, I'm gonna name it as recap. Okay, so I'm gonna give you just a quick recap. So you know, like if you still didn't understand anything previously, I hope you understand it here. So rules that make the no-wick valid. Rules that make the no-wick valid. The no-wick candle has to be with the trend. That's the most important rules, guys. This is more than 50% of the strategy. Bullish trend plus a bullish no-wick equals buy. Bearish trend plus a bearish no-wick equals sells. It has to be one of the valid pairs. And as I said earlier, for the Forex pairs, it's USD, JPY, GBP, USD, AUD, USD. Can you trade it on futures? Yes, you can. Can you trade it on crypto? Yes, you can. Can you trade it on, I don't know, stocks? Yes, you can. Do I do that? No, I don't. Do I have traders in my community who trade this? Yes, I do. Do I know profitable traders who trade the no-wick on this stuff? Yes, I do. You would have to, but you have to put in more work, or maybe I could connect you with them if you're still actually genuinely interested. Because if you watch this whole video and you're a futures trader or if you're a crypto trader, hit me up on IG. I'm gonna connect you with them. They're very profitable traders, so maybe they could explain this better than I do. Anyway, third rule will be price has to come back to the no-wick candle within 10 candles. There should be no imbalance against us. Time frame should be 15 minutes and above. Is there people who trade on the 5 minutes? Yes. Is there people who trade on the 1 minute? Yes. Do I do that? No, because I found the best time frame for this is the 15 minutes. Stop loss should be always at the most recent low when you're buying, and stop loss should be at the most recent highs when you're selling, regardless if it's a higher low, lower high, if it's a higher high, lower low. That's it. Take profit is at 1-to-1, regardless. Can you change it to 1-to-2, 1-to-3? Yes, you can. Do it at your own risk. I know people who do that. Just know that your win rate is gonna drop. Because if I tell you you're gonna have 90% win rate at 1-to-2, I would be lying to you. When you place your stop loss, always leave a breathing room, 10% rule. If your stop loss is 10 pips, it has to be 11 pips stop loss. If your stop loss is 20 pips, it has to be 22. If it's 30 pips, it has to be 33, and so on. To take into consideration spreads and to take into consideration liquidity grabs and so on. An Omar entry, you should use it only when your stop loss is more than 15 pips. Rules that make the no-wick not valid. If price comes very close to the no-wick and then reject, it's not valid anymore. If price creates structure before tapping the no-wick, it's not valid anymore. The trade is not valid if it's early Asia or late New York, so last couple of hours of New York session and first couple of hours of Asia session. Avoid trading horizontal trends, chop, consolidation, like once you see the trend, when you can't read the trend, when you see the trend moving up and down, if you're not in a clear uptrend or not a clear downtrend, avoid that price action. It's choppy, we can't predict it. If a no-wick candle shows up against us, but structure shifting, then should you move stop loss to BE or cut loss? Or do nothing? It's up to you. News, as I said, I don't trade 1 hour, I don't take new trades 1 hour before news, and I cut loss or I close my position in wins or in losses 15 minutes before news and 15 minutes, and I can take new trades 15 minutes after news. I'm gonna name it 15 minutes before news, before and after. Types of setups. You got the A setup, which is structure, trend, and a clean market structure. This one has a 90% win rate. We got the B setup, which is the internal trend, sometimes, and then when it's against the external trend, that one has 80% win rate. And then the C setup is when we have a no wick candle directly after a change of character, you get a 70% win rate. Cool. That's it pretty much. Let's see what else we have. So yeah, that's it pretty much. Now, this was the quick recap. Take a screenshot of this, save it, print it, write it down on a piece of paper, on a Word document. Like, these are the most important rules that's in the market. So without this, you're gonna be lost. Now, in the beginning, I remember I used to write them down, and like that's how we came up with this strategy, you know. Every time I get a new rule, I would write it down, and then that's how I came up with this list. Now, of course, I don't use this list anymore because it's already here. A piece of paper I can lose, but what's inside of here, I'm never gonna lose, hopefully. Unless if I get, yeah. Okay, so that's it for the recap. Now, I wanna tell you one thing. This is very important, actually. Maybe I should do this. Oh no, it's locked. Perfect. Now hopefully you can see me better, you know, because I want to talk to y'all from a man to a man, from a man to a girl, whichever it is. Look, the knowing strategy, now you know most of it. Now you know almost everything that's in my brain, which is crazy. That's a lot of information. If you actually understood maybe 70 or 80% of what I said, you're going to be in different places in 1 year. In 1 year, you're going to be texting me on some, yo, I'm a different human right now. You know what I mean? But no, that's not the point though. I'm joking. I hope so though. This strategy, I told you earlier, it has a 90% win rate. But you see why I told you it has a 90% win rate? That's when you follow all the rules strictly. That's when you move stop loss to break even. That's when you follow all the rules absolutely. That's when the no wick candle doesn't come against us. That's when you're following the A setup. That's when you're following the structure. That's the 90%. That's why I tell you guys, like, you could go back to this and you're gonna end up finding the 90% win rate. Now, do Omar trade only 90% win rate trades? No. Usually I do that only when I'm risking, like when I'm trading prop firms and I'm risking high. I do trade only A setups because I wanna, like if I'm taking aggressive approach on prop firms, then yes, I do only trade A setups. And I do this also when I'm trading a live account, but flipping accounts. Like if I'm, let's say, put $1,000 and I'm just trying to flip the money quickly, then I'm risking too much of the money, then yeah, I do like trade only A setups. But I gotta tell you this, I gotta warn you about this earlier, so you don't get shocked later. A setups, yes, they have the highest win rate, but they don't happen often. So to find all the rules happening, it's not gonna happen all the time. That's why an A setup is good, it has the highest win rate, but they don't happen often. So you're probably gonna end up catching 2-3 trades a week. If you're cool with that, you're still gonna end up making a lot of money, don't get me wrong. If you're cool with that, if you have the psychology that allows you to take 2-3 trades a week, then go for it. But if you feel like you don't have that psychology, it's not a problem to move to the B setup at least. B or C, it's up to you. Me personally, I like to take trades every day. So that's why I'm alright with taking a B and C setups, A, B, C. You get what I mean? So now you know how to reach the 90%. I gave you the full guide on how to reach the 90% win rate, but it's not an easy journey. That's why I would recommend you still take the B setups and the C setups, because having an 80% win rate is not bad, guys. You're already from the top 1%. You get what I mean? Like, this is some high information that not like even high profitable traders wish they can reach such results. And now you have it. I'm gonna be honest with you. I don't know how long this system is gonna work for. That's why it's very important that you capitalize on this while it's working. Because I know once I post this video, it's gonna probably go, a lot of people are gonna watch it. So I don't know how long we're gonna be able to make money from this. But it's important that you make money while you can. I already made my part. I already made a lot of money from this. So try to do that. Now, I can't guarantee that something's gonna happen to it. I've been using it for more than 3 years and I've been profitable with it. Nothing happened, God bless. But I'm just saying, I had to warn you. Now, one more thing. If you wanna customize this strategy for your sake, I don't mind. You can, if you feel like you want to start trading it 1 to 2, 1 to 3, go for it. But don't expect to get the same results as I do. Okay? If you want to, let's say, add new rules, go for it. If you feel like you want to add extra confluences, I actually highly recommend you to do that. If you want to add support and resistance to this, if you want to add fair value gaps, if you want to add liquidity, no problem. Some of my students do so, and they're still very extremely profitable. You get what I mean? So adding confluences is not bad. Just know the more confluences you add, the less setups you're gonna get. That's it. If you're still like not confident in the no-wick strategy and you want to add more stuff, feel free to do so. No one's gonna stop you. If you want instead, let's say instead of 1-to-1, you want to target the highs, you want to target the lows, go for it. That's what Gora does. My student, he's actually one of my most profitable students. I taught him everything he knows about the no-wick strategy, but yet he still does some other rules. Sometimes he takes the trades more than 1-to-1. He targets some key levels, point of interest. He doesn't trade 1-to-1. He trades sometimes more, sometimes less. Sometimes he takes his take profit to the most recent resistance. Sometimes he takes his stop loss below the most recent support. It's up to you. Customize it the way you want. If you want to add trend lines to it, go for it. If you want to add, I don't know, ICT concept to it, go for it. If you're an advanced trader, if you know generally what you're doing, go for it. I'm not gonna stop you. But if you're a beginner, stick to these rules. Because I see this every day. People text me, okay, Omar, instead of market structure, why don't we start trading using RSA, for example, or I don't know what it's even called, like, the things, like, or other stuff. Why don't we add this confluence? Why don't we add this confluence? Why don't we add this confluence? I could, but I want to keep the strategy simple. I've been profitable using this. So why fix something that's not broken? And same for you. If you want to add stuff, go for it. If you want to, I don't know, if you want to trade on the 5 minutes, go for it. If you want to trade on the 1 minute, go for it. If you want to trade on the daily, go for it. I'm not going to stop you. Because if you become profitable, I'm not going to benefit anything. And if you lose all your money, I'm not going to lose anything. So it's up to you. Okay? It's generally up to you. You can do whatever you want. Now, I taught you the basics, the advanced, the everything that I know. What you want to do with this information, it's up to you. If you want to follow the rules, the ones I do, please do so. I'm going to show you actually some results of what happened to people and how they passed their funded after using everything that I told them. You know what? I'm going to jump to my phone or to my camera, let's see. And I'm going to record from there. Because I want to talk to you even like closer, you know what I mean? Because I don't feel comfortable recording from this camera. So it was nice talking to you all though. It was very nice talking to you all. It's a bit sad that this is ending. But I mean, it's sad, but it's a start for something better, hopefully. Because you're going to guys still see me in other videos, trade recaps. And hopefully one day I'm going to make a YouTube stream so we all can talk together, because I feel like you guys now know me, but I don't know you. You know what I mean? Well, I still get to know some of y'all because y'all have been hitting me on IG and YouTube, and y'all always give good feedback, so I love that. But let me just quickly jump to my camera and I'm continue this video, because now what I'm gonna drop is, I'm gonna call it the opportunity. I'm gonna call what I'm gonna drop right now the opportunity. So let me just switch to my camera quickly. So, if you watched this whole video, congratulations, because I genuinely believe that you're gonna become a profitable trader after this. Now, the reason why I'm saying I believe that you're gonna become a profitable trader, because after watching such a long video, around 5 hours video, this shows me something. This tells me something about you. This tells me that you're a serious trader who genuinely wanna make it in this industry. Because watching 5 hours video about trading and Forex, this already shows me that you're dedicated enough. You're ready to put in the work. So you're already ahead of 90% of the traders. This strategy is simple. That's why you don't really need to watch hours, hundreds of hours to be able to become profitable using this strategy. Not like ICT, for example, which is profitable strategy, but it's very complicated. Anyway, I'm here. I want to tell you something about my story. So let me tell you a short story about Omar Nowick. Who's Omar Nowick? Before he became profitable? Well, In short term, and I'm gonna say very shortly, very briefly, I started trading a couple of years ago. As usual, I thought, okay, trading, I'm gonna become a millionaire within 6 months, because that's how people market it online. Well, that's not the truth. I learned it the hard way. I was unprofitable. I lost thousands of dollars in my first year of trading. I blew 8 funded accounts before I was able to pass my first one. And I didn't end up even getting paid from that. That tells you a lot about me. Now, if you're new to the trading industry, you're not gonna be able to relate, but that's most probably what's gonna happen to you. And if you're already a trader who's been trading for 1 or 2 years, you already experienced this probably. You probably blew so many accounts. Now, when is this gonna end? That's a good question. It will end when you decide it will end. How is that? People always talk about trading, talk about risk management. Now you know the strategy. You almost know everything about the Nowick strategy. Now, why am I profitable with it and you might not be profitable with it? Well, I'm gonna tell you the truth. There is a part about trading that I can't teach you unless if I'm teaching you one-on-one. Now, what do I mean by that? I'm gonna give you a quick example. When you're in a losing streak and fear is kicking in, who's gonna stop you from over-risking and leveraging and over-trading? And then when you're in profit and you have a 5-6 win streak, who's gonna stop you from being your ego going up and thinking, yes, I figured out everything, and you start over-risking because you wanna make the money quick? Well, that's my job. That's why I'm gonna give you an opportunity, which is one-on-one mentorship. Now, mentorship, yes, it's not one of these, you might be wondering, it's like one of these courses online that they sell you for $100 and then you end up getting a PDF or pre-recorded videos. That's not the case in my case. Because when you end up working with me one-on-one, you don't only get to pre-recorded videos. No, you do get more videos in depth about the strategy. You also get, for beginners, you also get how to set up MT5, how to set up which prop firm to use, how to calculate lot size, what are candles. You get even the basic stuff. Now, let me show you a quick example about the traders who joined my program and what results they were able to achieve within their first month of starting this program. As you can see here, this is Gorav. He was able to get $6,000 in payout in his first month from trading. And this is my results, because I traded live account, and that's how you can see where I withdrew $22,000 from my live account to my bank account. Now, I know you want to be like, you want to do this because this is life-changing money, right? For anyone. If anyone tells you no, it's not, they're lying to you. Now, you might be wondering, okay, but Omar, I don't have such type capital. How do I achieve such profits? Well, that's my job to do that. My job is to show you how to be able to start with a small capital and compound it over the years in order to reach this level. Also, if you have a low capital, there is prop firms. That's where you can get a payout and start making your capital in order to be able to invest in your live account. That's my job to teach you how to do that. Now, you have two options. Either you take the easy route, or you might think it's the easy route, but it's the wrong route at the end, because it's gonna end up taking you years, and then you're gonna figure out, oh, I was wrong about this, which is trying to make everything by yourself. Could it work? Yes, but then the probability of this working is less than 5%. Or you can take the other route, which is taking the mentorship, where I guarantee you that you're gonna become profitable within the first 90 days. So option is yours. Which one do you wanna do? Do you wanna wait years in order to become profitable, or do you want to be able to make it in 90 days? Now, here's some of the results that, as you can see here, of my students and how they were able to become profitable. It's not rocket science when you have such a mechanical strategy, but you need someone to be on your side. They were able to achieve such results humbly because I was in their corner. Now, what's included in this mentorship, you might be wondering? If it's not just pre-recorded course like these online gurus, what is it? Well, you get access to my Discord, where there's a lot of students, profitable, serious traders. It's not just because I don't accept anyone. I only accept serious traders. You also get multiple group meetings with the other students and me. You also get one-on-one calls with me every single week. You also get access to my WhatsApp number, where you can text me about anything you want, related to trading or not. You could text me even if your stomach is hurting, and I will be there for emotional support, because I know trading gets tough sometimes. So I'll be there for you. You might be like, okay, today I risked wrong, or today I took a bad trade, today I got emotional. I'm gonna be there for you. And then when you're winning streaks, I'm gonna be there for you. I'm gonna tell you, yo, okay, it's good. Be happy that you're getting these payouts and that you're making this amount of money. But also know that there's bad days. I'm gonna be in your corner regardless. When you're up, I'm gonna be there, and when you're down, I'm gonna be there, because that's my job. So if you're interested about all of this, I'm gonna skip yapping. I'm gonna skip directly to it. If you're interested about all of this, I'm gonna leave the link in my description. Make sure to apply there. Now you might be saying, apply? Yes, apply. Because I said it, and I'm gonna say it again. I don't accept serious students. So you gotta apply there, and then I'm gonna review your application, and it's usually almost direct. If you're qualified, you get to book a one-on-one call with me, and then that's where we discuss it more in details. We can talk about the price. We can talk about I'm gonna answer any questions you have. Sounds good? Well, I think, because you watched this whole video, I believe you're a serious trader. So that means you're most probably qualified. I want to add also one thing. This opportunity is going to be only for YouTube people who watched this video. Why? Because if you watch this whole video, around 5 hours, it's already telling me that you're serious, and that means you're most probably gonna take this program seriously. Because I'm here, I don't accept anyone. I want people who are gonna show results, who are gonna be able to get payouts, who are gonna be able to probably in the future teach other students. I want people who are willing to make it in this industry, who are hungry, who are gonna be backtesting, who are gonna be journaling, who's gonna be taking trades, who's not gonna over risk, who's gonna be active. If you think that you fit in the category, then you definitely should apply through the link in my description. Sounds good? All right. Anyway, I'm gonna skip the yapping. Regardless what happens, if you end up applying or not, if you end up being qualified or not, I genuinely mean it. I genuinely hope that you become a profitable trader, because Wick strategy is always gonna be on top, and I wish you all the best. If you have any questions, you could leave a comment, or you could hit me up on IG. I'm also leave the link in my description of my IG. I'm more active there. I usually reply to DMs within 2-3 hours. So hit me up on IG. I'm more active. I'm gonna reply to you directly. And what else? Yeah, make sure to follow, like this video. Hey guys, I didn't record that 5 hours video for y'all to not like this video. So make sure to like it and share with your friends. Don't be greedy. If you want to become profitable, let your boys get profitable too. Let's go. Anyway, I'm gonna see you in the next trade recap. Make sure to subscribe. See you there. And peace out. Love you all.